A lot of news this morning, huh? Uh, no way I just bought the top. No freaking way. Unbelievable. How's that possible? How's that possible? First trade of the day, top tick Tommy. Literally stopped billions of dollars. Just billions. Or shit. XLO. Let's go, bud. Let's go, Chickabow. Right on the face. Let's go, bud. How did I lose on A and AB? Because I went long and it immediately reversed. I'm pro like that. That's a pro move, you know. Wow. At the gap. Soils with a level 27. I wonder what the second place level is. Soils. They had phase 2 data on A and AB. It was positive, but I guess there might be something in the headline that pushed it lower. Oh, yeah, 69. Is there nothing moving this morning? Oh my. This is not prepared for that. Your boy Ace just got on trying to figure out what's moving right now. XMCI is a little bit juiced. Nice cock. What's up, Vault? CPI today? Yeah. Well, wait. Yeah, CPI. That'll be a market mover. Got stuck. Like, push. There you go. Let's track Alzheimer's, huh? SMCI. I don't get this thing. Morning, James. This thing is juicy, man. I've only been on since 8 o'clock, and he hadn't made a trade since I've been on. So I don't. He usually does stuff super early too. So AIFF yesterday he did, but I don't know about today. He's not showing his previous trade screen right now. I'll let you know whenever he shows it.
6 more months and it'll be even better looking.
You're damn right I will. Oh, you mean you? Let's go, bunny. 30 months. Yeah. Is ETH gonna run today? I haven't looked at it yet. 4 hours, curling. All right. I don't know. I don't know. I don't have a feel on anything right now on it. AI AIFF. You're gonna short it. I think that's how Badass blew out his account last night. Short an AIFF. I mean, it blew up his day, not his account. Platform's best. I don't know which one the best is. I think a lot of people that do short use center point. ADL one. Is there news on this thing, or is it just moving to move? So, uh, I tried using DOS. Yes, I like the look of DOS. I do not like the setup process of DOS. But DOS, you have to understand, DOS is just a skin. It's not a trading broker. So that's not going to help you with shorts. You put it on top of a broker. Short of daily levels. Yeah, that's what Mad As did yesterday. He's talking about in his post. He blew like, what was he, negative $350,000 yesterday? It's wild. 380. Jeez. You could see yesterday's price action exactly where people like him got stopped out, because it stopped being like choppy and all of a sudden you got that huge breakout. You can see it. Yeah. Let me get out. Let me do this trade first. All right. Which halt was it? I think it was this one here. Was it AIF? Or was it? I remember saying, oh, jeez. Was it this one? Okay, maybe you can't see it on the chart as easily as I thought. There was one green girthy candle yesterday that I was like, oh, wow. It's not as clear here. Huh. So Ross is up $1,700 this morning. So that's slow for him. That would be the slowest day of the year for him. He's usually like up $10,000-$20,000. Can't short this. Okay, short share restricted. Okay. Whoa. Plus 0.4%. Oh no. So it's hot. Patent for bonds were already moving. Spurgy. They moved. Oh no. We are gonna crater, aren't we? Month over month, 0.5, expecting 0.3. Actual year over year, 3%, expecting 2.9%. Month over month, 0.4. Oh, 0.4. I thought he said 4%. 0.4, expecting 0.3. Year over year actual, 3.3, expecting 3.1. Yikes. Holy drops. So inflation's creeping back a little bit there on that reading. The markets are freaking losing it, dude. Worldwide rights. 36 is the stupid level. This one could go. Look at this daily chart. A lot of price compression. Yeah. Oh, let's percolate a little. It's the only thing moving. Worldwide rights up against the 200 moving average. Price compression in the daily. See if it can move. How's that hitting? Let it open up. $1.5 million shares there. Bitcoin's dropping pretty hard, boys. Market ain't gonna like that number, is it? Damn. Yeah, Bitcoin's gonna pull back. Got like a bit of a trend line through here. Bounce, 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 bounce. So we'll see if this cracks and then like recovers. At this point, like anything probably over 95,000 is bullish. That alert's probably just gonna about to go. Yeah. Come on, give me a pullback on this sucker. He is getting cracked. Damn. Tyvek gonna moon? Yeah, I think so. It's over the 200. I was kind of waiting for. I thought I was gonna pull back, so I emptied my shares. Nope. Tesla's probably gonna go with the market, my guess, but it is down quite a bit, so we'll see. Is PLTR red yet? Oh, finally, huh? Mm. Why is that not selling? Oh. Yeah, can never give me a gap up, can it? Piece of shit. Okay. Well, Spurgy, that's always kind of been the case. If they really want to get inflation down, something usually breaks. So that would be the definition of the hard landing. Crypto's taking a shit right here, boys. See if this market bounces. Yeah, Tesla really didn't. All it did is go to yesterday's close and now big bounce. That might be telling right there for Tesla. Hardy board. Yeah, my exterior of my house is. I mean, I didn't do it myself. It's a messy process cutting that stuff. You got to mask up. It's freaking concrete dust everywhere. I didn't use Hardy board. There's another brand I used. I can't remember what it's called. Same stuff. Last forever. Yeah, it's concrete board. Throw some paint on it. She Gucci. No, I mean you don't have to paint it. There's Hardy board that does come painted. Yes. Mine was not because I wanted to paint it. Hmm. What? Oh, it's in the. That's why. TBAI, what an animal, dude. Told me. Interoperability. Another second. Ba-da. Yeah, I don't know what's gonna do it. Spurg. Hmm. There it is. There it is, boys. GNSR? What's that? I've seen that one before. Intel's going still. Yo. Yo. What do I think about CPI numbers? I mean, they were a little hot, right? So depends how much the market's gonna give it weight or not. Kind of looks like a little head and shoulders there, huh? It's got some daily levels here. This is 138. Can it not be met with infinite selling, please? It's already got more volume than yesterday. I mean, this is way above average volume. $145 level. Damn, Micron. It's 50. Oof. Oh, I only took 200 shares. Son of a bitch. AIFF coming back up. I want to be in that. How am I not getting filled there? This is ridiculous. Thank you. Jeez. Offering. Oh, this is red? Wow. Oh, gosh. Market's pushing back down. What it is you're doing right now? I'm trying to make notes. It's okay. If not, you look busy. I'm just trying to find the next. So every stock. Hang on. I'm listening to news first off. So yeah, I'm listening to news is the first thing I'm doing. But after that, I'm looking for an entry. I'm looking for a pull. If it's stock's going up, I'm looking for a pullback and then a continuation entry. Right now we just have nothing with. Okay, there's TVAC. Oh my gosh, E-Turd, you freaking. Hello, I hit the buy button twice now. E-Trade's lagging this morning. It's pissing me off quite a bit. So yeah, this one I'm going for a high day break. It's now over the 200. So as long as this level holds, call it 36, 37, it should do very well today. We'll see. You can see that it's usually resistance on all these other pops. This time it's over it. So if you hold that, that's kind of my level of where these penny stocks can get stupid. See if we get up to this 43 now on it. A lot of selling here, though. What we don't want is to, like, give this high day back up. Want to expand from here. SOPA coming back up. Big fight at 40 right now. Damn. So, but high day here. B sig with a hit. B sig with a contract. $12 million contract. Seems like a big deal. Do I have a Discord server? I do, Steven. Get you that invite. Steven, are you watching on the vertical stream or the horizontal stream? So I know which chat to put the link in. Kenny, shut your freaking face. You hear me? Shut your freaking face. Assume you're in this one, Kenny. Steven, I mean. There you are. Kenny, chat does not know my age. Don't give out the personal information to these animals. Definitely nowhere near 50. Let's put it that way. Sons of bitches. AI at 1051 might do it here. So this is a 5-minute cut go here. This might do it. Consolidation right underneath the diagonal. See if it holds up. It could do it. MACD is close to flipping up. Hope that's the right 5-minute. Okay, it is. Price when you check your candle data. Huh? There we go. No idea what cheese is talking about. Did that just cuck? Okay. Another failed cuck. This might be an ad back here. I have to confirm 5 minutes. Shut up. All right, MACD's crossed back up. Come on, give us the juice. Give us the juice. These levels need to freaking hold, man. Dell. All right. Trying to get outside of this Bollinger Band. Oof. You were doing underwater welding in your 20s? That's like the most dangerous job in the world, isn't it? Freaking animal. Cousin did that when he was younger, too. I don't know what's going on with this HSAI. Message? What? What are you talking about, cheese? X. Oh. Mexico president, we are going to send a message to White House on steel aluminum tariffs. Oh, I bet you are. This will be now the second time they've talked tough and then probably within 24 to 48 hours crumble under Trump's message.
Almost forgot to give you
Imperial.
my Prime Daddy stock nuts.
Don't you dare forget about that. Don't you dare. Daddy needs your 250. All right? Daddy needs your 250. Say it with me. Yes, Daddy. Good boy. Stocks better than futures. Deep cheese is following. Good gun. It's not neither. There's no better. I would say futures is better because you get a tax break on it by trading it. I've never traded pure futures, but the same stuff that we're doing here applies to any asset with decent volume. We're still looking for patterns. We're still looking for predictable moves. You can use the same candlestick patterns that you do here over in futures. It doesn't matter. Yeah, futures can get wild. This used to work at Blockbuster Video. Stupid freaking. Futures is greater than options. SPIR hitting the scanner here. Yikes. Down 50%. What is with all these big droppers today? What the hell? Kind of man in China. We're kind of out of shape while working at Blockbuster. Chat's on one this morning. Are we still red? Oh. Okay. It's a nice surprise. SMCI. Little range break there. Nice. Little diagonal break. Pop. Yeah, salty it is. Really slow. But we're doing all right. We're doing all right. No Greeks with futures. True. True. Ladies and gentlemen, I want to point out right now, we are now streaming across 4 platforms. We've got the Twitch, the YouTube, and the Kick. And today we added Rumble, baby. I'm still waiting for my first follow on Rumble and my first chat and message in chat on Rumble. Go. Find me. Yeah, MySpace is tomorrow. Don't worry. Is that one guy still on Kick? Demjin, they're talking about you. Today we got 2 people on Kick. We got the salty stock skipper over there showing up. And Demjin. I won't like the chatters in Rumble. Is that to say that I like the chatters in Twitch or something? Hype train. Oh, let's go, bud. Markov, let's go. New sub. Welcome, my man. Is it technically 5 with 2 what YouTube? Yeah, 10. I said 4 platforms. 5 streams, yes. There you go. We got Hilo and Santa. There's our first chats over there. I haven't incorporated you into the stream chats. The stream won't see you. But I know you're there. You're next. I see you. I see you. Classic. If you want to get in on Discord, you've got to select the right setting. It's not anything that I do. It's something that you do. You got to go up to the roles channel. And if you want crypto, you have to click this button. That'll open up the crypto role or the crypto channel to you. We do this just to keep things clean. Yep. And it's to stop millennials and Gen Zers from joining our channel because we know they won't read past a full sentence. They don't have the attention span to read a full sentence. They just start clicking and things work. Okay, we're gone. Okay, I'm in. It worked on Classic. I know it was. I know that's how you freaking Gen Zers work. So predictable. Because I know you had to click something to get into the channel overall. I know you had to click something. So that means you just didn't read and click something. I guess it's not Gen. It's not. I guess it's not millennials. It's the Gen Zers I'm talking about, really. Millennials took the heat for so long. Deservedly so. Let's be clear. News here. Oh my gosh, the market's open. All right. Well, wasn't prepared for that. 5-minute break. Be back. AIFF absolutely juiced to the low. I was just watching. PLTR juice. Good God. Tesla back to the into that morning level. Damn. This is how we're gonna do it today, huh? Market trying to climb back up. AIFF, absolute banger. Wow. What an absolute banger of a move here. It's open. 43.41. TLTR near the highs. Tesla near the highs. Jeez. TLTR ready to go. $701. We're not gonna break through this. 37.16 is the pre-market level. Do it. kind of thick. PLTR juicing. Might be a bidder for the company. Wow, this is being suppressed big time. $13 on AIFF. Wow. Okay. SMCI red to green. What's this? 90 level. For a quick scalp here. Oh, come on. $43. There it is. What's this level? Oh, yeah. It's a big break. It's another level at 43.50. SMCI, wow. History. Was your big win yesterday? It went for about well, it wasn't just yesterday. That 117 has to do with the 1,000 I'm up today. It was, I think the most I had on one stock was $1,500. I had a $5,000 win yesterday total. So it was just good trading overall. There was two tickers I were right on, and both of them were under $100 losses. Everything was working yesterday. Streaming on Netflix. What? Where's that? It was news yesterday. If you can find me the link, I'll freaking apply. Dude, AIFF is insane right now. The 30-second chart looks really good on it. The 1 minute has no pullback, but the 30-second, you can totally play it the same. Very nice. CSAI trying for 14. LTRY on watch for a 5 minute. It's gapped down quite a bit. So looking for a gap fill on that eventually. SOPA fell off a cliff. Jeez. Pikachu, I stream every day, homie. $38 months. Did I miss something? I don't see your 30 whatever months. Stock Daddy. I mean, you got the badge. But if you're looking for a little extra, you're going to have to pay up. Much money low in PDL Qs. Their spies close. Interesting level. LTR juicing. Shocking. Ba-doo-ba-doo. TLTR 1 minute building. Missed it because he turned. Futu and TIGR, huh? SOPA, what are you doing? GNS, the CEO, is tweeting about the market cap. It's half of their Bitcoin holding. Well, how about you guys stop dumping shares on the market? You're so pissed off about it. Start buying it back. $45.5 might do something. We'll see. Two. Oh. $46.8 high day. What are we gonna do here? Okay. LTRY. Jeez, IOQ, BBAI. Damn. Are you kidding me right now? PST. SOPA. LTRY. $94 E-turd. Really? Oh. All right. Nuts, dude. This is going to be a fun one, it looks like. Whenever that curls on daily. DOMH. You're up big, Luke. Nice work, man. Warren. Wow, quite the move on TIVC. GT popping. What's that about? See if it can go. You gonna push it or not, SMCI? Yeah. Huh. LTRY to a 4. All right, looking for a candle under candle here to break through this level. If it does that, fantastic. I make money. If it breaks and bounces, we probably go high day. PLTR ready to do something here out of this range. Didn't do it. Really light volume on this pop up. I'm expecting a move down. Not doing what I thought it would do. Still got an order for this low breaking. It's taking a little longer than I'd like. You could candle over candle here and pop. Over 85. All right, it's a failed cock. Bears back in control if we get a cuck here. This would be an M pattern now. Not moving. Better. Still bouncy, dude. How'd that fill me? Didn't. Okay, all right. Finally gonna break down. Oh. Break down, damn it. Feels strong. ESOA. Yeah, I see it. Isn't Powell speaking? Oh, yeah, we put him on. What, he got day 2? What's up here next? uh,
Nationwide is more than you think.
Oh, yeah. There's estate
That's
planning resources.
really loud. Why was that coming through? Air. KDLY. Where'd that go? Powell. 5. There it is.
To name a few, and I've sat through her questioning, and it's fierce and tenacious and directed. Myself, my team, and frankly, the whole financial
Holy
services
gain on the
committee team
microphone.
can't thank Nicole enough for her work and what she has done on behalf of this organization. And like all good staffers, she has become a confidant, a sounding board, has the ability to say no in a very nice way, but in a very tough way as well. And although Nicole will be leaving the committee, her contributions will not be forgotten and are deeply cherished. So thank you, Nicole. We deeply appreciate all your
GRRR,
work.
Gorilla Technology, making new highs now, up 13% following that earlier
BBAI
press release from the
high
company.
rate.
That's
Oh my
Alpha
gosh.
Romeo.
Thing's wild, dude.
Mr. Chairman, we welcome your testimony. Chairman Powell, you'll be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statement will be made part of the record. You're now recognized for 5 minutes.
Chairman Hill, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and price stability for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation
it's
has
OpenAI
moved much
news
closer to our 2%
coming out from Axio. Sources tell Axios that OpenAI's
We are
board
attentive to the risks on both sides
has
of our
received the
mandate.
buy offer letter from
I will
Elon Musk.
review the current economic situation before turning to monetary
Oh,
policy.
jeez, that's so funny.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP
The
rose
pettiness is
2.5%
so
in 2000.
funny
Mr. Chairman, can
by
we ask you to
both of
pull your
them.
mic a little closer, please? Thank you so much.
Sure. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024.
Or where are they at today? Are they at the?
Bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have
Are they in the
declined
House
fourth
today or
quarter,
Senate? Where are
but was
they at?
solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months.
Yeah, your mom
While an
says.
earlier increase in the
Okay.
unemployment rate has been
Got
steady since the middle of
Bitcoin.
last
Go
year
ahead.
and at 4% in January.
Take
remains
your
low.
finger.
Nominal
This,
wage growth has
like you're
eased
gonna
over the
flick
past year, and
something?
the jobs to workers gap
Go
has
ahead and
narrowed.
flick your penis
Overall,
hole.
a wide set of indicators
Okay?
suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated
SPGC.
relative to our 2% longer-run goal. Total PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote
AIFF,
maximum
5-minute.
employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full
UPST,
percentage
is this a
point from
5-minute
its
cut
peak,
go?
after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of progress on inflation and the cooling in the labor market.
Yep, it is.
Meanwhile,
so
we've continued to
over
reduce our securities holdings.
50?
With
88.50?
our policy stance
The
now
GNRC
significantly
Generac
less restrictive
shares at the
than it
intraday
had
high
been,
now up
and the
about
economy
4%,
remaining strong,
127.38.
we do not need to
Following
be in a
their earnings
hurry to
report
adjust
earlier.
our
That's
policy
Golf November
stance.
Romeo Charlie.
We know that reducing policy
earnings
restraint
poll
too
going on
fast
now.
or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
I mean,
Considering the extent and
these lines that
timing
he's
of
saying right
additional
now,
adjustments
we have
to the
heard
target range for the
literally for
federal funds
2
rate,
years now.
the FOMC
Like,
will assess
no one
incoming
just
data,
says,
the evolving
hey,
outlook, and the balance of
can you
risk.
say something different? Because you've been saying that for 2
As the
years.
economy
Maybe
evolves,
longer.
we will
It
adjust
might
Mexico
be like 4
TIVC
years.
Tango India Victor
Less
Charlie
promotes
shares the
our
scene continued heavy
maximum
activity new
employment
highs
and
It's
price
literally
TIVC.
slight
The economy
changes in
remains
the
strong
word.
and inflation does
for the
not
past-
continue to move sustainably toward 2%.
It's probably been 4 years.
We can maintain
Jeez.
policy restraint for longer. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated,
chatter.
we can ease policy accordingly. We are attentive to the risks to both sides of our dual mandate.
How did you
and
pin
policy
that,
is
Chicka
well
Bow Wow?
positioned
Oh,
to deal
pinned by
with the
Denton.
risks and uncertainties that we face. This year, we're conducting our second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally assigned goals. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communications tools. The committee's 2%
Denton
longer-run
pinned
inflation
your
goal will be
Kick message
retained
on
and
Kick.
will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board the lessons of the last 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve the dual mandate goals Congress set for monetary
Tesla in
policy.
our high day.
We remain committed to supporting maximum employment, bringing inflation sustainably to our 2%
BFRG
goal,
going again today, huh?
keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you, and I look forward to our questions.
Thank you, Mr.
BBAI.
Chairman. Chairman yields back. I want to recognize the ranking member of the full committee, Mrs. Waters from California, for a 4-minute opening statement.
Good morning, everyone. Welcome, Chair Powell, to our country is on the precipice of an economic disaster.
House
unlike
Republicans
anything
proposing
we've seen in
$2
recent
trillion
memory.
in
Trump
cuts to
promised lower
mandatory
prices
spending.
for working
With some
class
macro notes on the
Over
wire,
10
U.S.
years.
Republicans are proposing $4.5 trillion in tax cuts.
Prices are rising. According to the Labor Department, eggs are
Spending
up
cuts or
40%,
tax cuts?
more expensive than they were even a year ago. In my home state of California,
Which one is it?
We've seen eggs as high as $9 and more for a dozen. Inflation is rising, and it is up to 3% for the
Tax
first time
cuts is the
since
headline.
June. And
I want
other
to see that. Man, it's nice.
staples
so I don't get
are about to
absolutely
more expensive.
Backdoored
Trump
by the government
levies
come tax
new
time.
taxes on
But
steel
I want to see
and
the
aluminum.
spending go down.
America's consumers and
spending
businesses
go
are
down?
facing uncertainty and chaos. This is all
Coming up at
because Trump
10:30, crude
and his
inventories, a
unelected
build of
billionaire
2.4 million
co-president
expected,
Elon
gasoline, a
Musk
build of
are taking a
1.9
That's
million.
his
sledgehammer
wife.
to our
Distillates,
economy
a
and
draw of
democracy.
I wanna see this
500,000
spending go
barrels
down.
coming
They
up
attempted to
in about
illegally kill
7 minutes
the
now at
Consumer
10:30 a.m.
Financial
Eastern
Protection
Time.
Bureau, the same agency created after the financial crisis of 2008. Since its inception, CFPB has successfully fought on behalf of working-class families against abusive big banks and predatory lenders, and not to mention returned $21 billion back to families who were swindled. Chair Powell, you explained yesterday that with the CFPB shutdown, there is no agency to supervise big banks to ensure they follow consumer finance laws. In the face of these illegal, cruel, and relentless attacks, Chair Hill, it is both urgent and critical that you immediately convene a long overdue hearing.
Former
with
Palantir and
CFPB
Elon Musk
acting
associates
director
are
Barr,
taking over key
members of
government
Congress,
IT
and
roles. Wired
importantly,
articles
the American
circulating.
public deserves answers as to why Musk and his Doge minions are in possession of sensitive consumer information and what
Past
they are
that, reciprocal
doing
tariffs
with it.
are a work in
Additionally,
progress.
Trump is
Conversations with other countries
simultaneously
began early on
threatening
Wednesday.
import taxes on U.S. companies that will increase the cost of groceries and other basic
Trump's
supplies
economic
for all.
advisor Hassett said
Trump is
reciprocal tariffs
freezing
are a
funds
work in
for
progress.
housing
Conversations with
assistance
other
That's
and
that
countries
guy
community
at
began
development
RFK.
on
We're
and
all
Wednesday.
sitting
whittling
on.
down the federal workforce so that his billionaire boys club can suck any of these workers' salaries into their own pockets.
She's not on her game
This is
today.
all part of Trump's
Maxine
Project
seems a
25
little
playbook. You know what else?
maybe tired or
he's
sick.
taken from Project 2025, Chair Powell? Their plan to eliminate the Fed. We're watching this play out as Trump doubles down on his efforts to gut the independence of the Fed. As we have seen with demands that you drop rates immediately. In fact,
gosh.
his co-president must attack Fed independence
AIFF
in a tweet
has a
earlier
squeeze
this
on the.
year.
Oh,
Chair
that's a
Powell,
30-second
I
chart. I thought
know
it was a
you
5-minute.
have been adamant
There's still
about
like a
the
5-minute
independence of the
W over
Fed and have
1332.
thus
It's still
far
there.
resisted pressure from Trump, but after your decision to eliminate DEI initiatives following Trump's illegal order, I'm concerned that Trump has more influence over you than you let on. I speak for all of my colleagues on the Democratic side when I say that you must stand firm in defending the Fed's independence, reject any attempt by Elon Musk and his Doge minions to gain access to the Fed, its systems and data, and speak forcefully about what's at stake for our economy. The American public must hear from you, our central bank, today. Go back.
Gentlewoman yields back. I yield myself 5 minutes for questions. Thank you again, Chairman Powell, for being with us. Let me start with the Fed's bank regulation and supervisory function. As I mentioned in my opening statement, over the
not
past
gonna go.
2.5
Not
years,
gonna
the
go. That's
outgoing
not gonna go.
Vice Chair for Supervision has pushed new regulations that would move the United States towards a one-size-fits-all approach to prudential regulation
Awkward.
that disregards the congressional mandate that's been quite clearly established for regulators to tailor bank regulation based on an institution's size,
What is it?
complexity, and risk profile.
8790. Did it
Earlier
not break
this year,
that?
the Fed board announced that
No,
Michael Barr
it
would
did
be
not.
stepping
No.
down from his position as vice chair on February 28th, 2025, or earlier, should a successor be confirmed. Significantly, the board also announced at that time that it does not intend to take up any major rulemakings until a vice chair for supervision successor is confirmed. I've discussed this with you. I've got concerns
Trade is
about that. You're
circulating
not
on Hawaiian
abdicating your
electric
supervisory
stock.
response
California
while we wait
Congressional
around for a
Representative Bill
vice chair.
Cisneros disclosed a purchase of up to $100,000 of Hawaiian electric stock. That's on the disclosure website.
Who bought 100,000? Are you kidding me?
Things that we should be proceeding.
That's HE Hotel
I
Echo.
testified in the Senate yesterday, and know you enjoyed
Wow.
the senators, and you talked a little bit about Basel III endgame.
I mean, that's not a lot of shit, a lot of money.
And I talked about that the intent
but that
was to
tells you some
harmonize those
things.
rules, true for the largest institutions in the world,
Shares
And
of
also
Wine
do that in a
Electric
way
getting a
that's
pop here
capital
now,
neutral.
$10.24
And many
on
of us,
volume
here in Congress
on
both
that
sides of the aisle felt like Vice Chairman
purchase
So-
by
Barr's approach was
Congressman Gil
gold-plating
Cisneros.
already
That's a great HE Hotel Echo. Shares are seeing the spike in activity, new highs since
Congressional rep
social media
purchased stock in
circulations on
name.
earlier notes
for those large
of a
institutions.
Congress
So tell us a little
disclosure
today
purchase.
about your intent to
Hmm.
repropose a Basel III
I wonder
endgame
what
approach.
if
It's
that
speaking
was the
on
spike
behalf
the
of
other
Fed
day.
only, not the other supervisors, and that it be,
Maybe not.
take into
That
account
wasn't.
the comments. And
It's
that it be
100,000 shares or
capital
$100,000.
We do intend to repropose Basel III Endgame, and we intend to do that just as
Fed
soon
Chair
as we can
Powell
get together with the new leadership
says
at the
plans
two
to repropose
other
Basel
banking
III once other
agencies, and,
regulations,
as I mentioned, I think
regulators
we
in
can do that
place,
pretty promptly
plan to
once that
propose Basel III
So
endgame.
back
Fed
to
will carry on
Bitcoin. We were
with
just
regulatory and
talking about the
supervisory
support level
duties.
that we cracked and reclaimed. So
Said capital for banks is about
it
right.
held.
Is it about right? And that would be my starting point on going into these discussions.
Do we
But I do wanna
have
leave
anything
for-
here?
I do want to, leave it for my upcoming, new leadership at those agencies to have their own views on that.
I think that's important. I think it needs to be coordinated and harmonized among our supervisory agencies. And I do want you to take into account how Basel III endgame proposal interacts with other pending rules.
So
whether it's on
tough.
liquidity or the other things like operating risk in the companies. I think that was a lot of centrality of the comments that we saw on your bar proposal.
Crude, a
Turning
build
to
of
monetary
4.07 million versus a
looking
build of
back at
2.4 million
2020 and
expected.
2021, I was
Gasoline, a
looking at
draw of
all the,
3.035 million
principal monetary
versus a
policy
build of
rules
1.9
that you
million
report in
expected.
your semi-annual
And
report.
distillates, a build of
And had you followed
135,000
any of the
versus a draw
monetary
of
policy
500,000
rules
expected.
that you track, they would have had you tighten sooner in the cycle rather than waiting. And I think that could
It's
have
ugly, but
reflected,
maybe.
maybe not seen us have a 40-year high in inflation. Using the benefit of hindsight, do you think you should have looked at those rules more closely
Maybe.
in the open market
It's tough.
operations and tightened sooner?
I will say, and I've said before, that suggests that it would have been good if we had tightened earlier. I don't know how much difference that would have made, but I'd be very careful with those rules. Those rules, those rules in the middle of last year suggested that our policy rate was a couple hundred basis points too high. So we need to.
Some I broke down. Just slow mover.
Right. But we've had this conversation before. The point is that they do offer.
Powell said, I would
a
be very
roadmap, and
careful
you
with
do
monetary
mention
policy
them in
rules. They are a
writing in
starting
your
point, not an
monetary
ending
policy
point.
reports, except for one time during the pandemic. And I think, though, that you're adding that to your reference point and your forward guidance and in your communications, I think would be important. Can you tell us about the review
What?
of the inflation targeting and when you expect to complete that?
Expect to complete it by
My
the
God.
summer this year. We're just beginning it now, and
We'll make
we're gonna
appropriate
look at all
discrete
the decisions that we
adjustments to the
made, why
Fed's
we made them
framework.
back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate discrete adjustments.
I thank you for being with us today, and I turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump, that he wants to do away with the Federal Reserve altogether. He said he knows interest rates much better than you do. I want you to know that some of us here have been fighting to make sure that everybody understands the importance of the central bank. Every country dealing with crypto, their central bank is involved. But, of course, Trump and the opposite side of the aisle fought us. And that's one of the reasons we were not able to come together with a bipartisan agreement on stablecoins. You previously said that you would not resign if Trump asked you.
Powell said no
do that.
changes to own commitment
stand
that
by
will
that
not
commitment?
resign if asked by Trump.
I have no changes to that.
I can't hear you.
Yes.
Thank you. Please let the record record that adequately. I appreciate that because you have a right to your position not to be interfered with by law, I believe, or even Constitution.
GRAB,
When Musk
Grab
comes knocking
Holdings
at the
popping
Fed's
here,
door,
$5.02.
you gonna let him in?
Shares up about 5% now.
I don't have
Golf
anything
Romeo
for you
Alpha
on that.
Bravo.
Would you like to tell us today?
Powell asked
that
if
you
Fed
wrote
would
that
let Doge have
into the
access to
Federal
Fed data.
Reserve
Says we've had no
have
contact, nothing
access
to report.
to the systems and the data?
So I don't have any, we've had no contact, and I don't really have, I have nothing for you to report today on that.
Well, you know what happened at Treasury, and you know what happened over at the CFPB, and the people of this country are being violated.
Yeah, I got
All of our
BBA. So
privacy
nice work, Grip.
taken up by
Doesn't mind that Doge is the hill Democrats are willing to die on here. We're against making governments more proficient and better.
everything that in our lives.
Well, you have to look at it this way.
Mr. Powell, the last time you testified before this committee, you said,
If
I quote,
there's a lot of money,
successful institutions in the
first
United
off,
States generally
Democrats are going to oppose it because they're going to oppose every single thing that
get the best out of
a
people
Republican
and
does.
attract
It's
the
the way it
broad,
is. That's
diverse
politics.
range
HE
of
juice in
talent
here.
to the table.
That's number one. Number two,
That is the way we feel about it.
there's a lot of money at stake. There's going to be death pains for sure.
What? And that is what we've been doing and will continue to
I
do.
hope Doge is the real deal because I've been
That the Fed continues
hoping
to
for
attract
something
the
like this
best
for
and most
decades.
diverse employees.
And honestly, I don't feel like it's doing enough. Or things are not getting, things aren't happening fast enough. Like we're getting rid of 50 million condoms to XYZ company. Okay, great. I want to see billions cut. I don't want to see millions. What do we spend, like $1 million a second? I want billions found and cut.
I think that's the best way to go about it.
Thank you very much. and
50K
that's what
con.
I've always felt about the Fed. No
Whatever it
matter
was,
what,
whatever the headline was, I saw that. I was like,
attracted the best qualified people in your operation.
it wasn't
No matter
real.
what they refer to it as, what they
I
call
thought he
it,
got the
what
country
they
wrong. I thought the reporter said it wasn't.
Yes.
It wasn't Iraq or
It's
whatever.
a ticker DraftKings and ticker
Mozambique.
PNN. It's a potential negative catalyst for sports betting stocks. Notes Kalshi is filing for new sports event trading contracts after the Super Bowl. They're now being circulated.
Thank you. I believe that you know
Super Bowl
that the OMWs were
contract.
created with the Dodd-Frank reform.
Sports betting
It's
contracts.
in law. And as I understand it, any attempt to dismantle OMWs would have to come before the Congress of the United States of America. Is that your understanding?
Well, yes, Section 342 of Dodd-Frank, which is the OMWI section, is the law.
Thank you.
Okay.
Chair
go ahead and
Powell,
pop
to
up
what
on that
extent
then.
Have you consulted with other
Oh, back to Snooze Fest Day. Is there big news coming up in economic data? Because everything just really died today. Thursday, PPI, month over month.
Anti-discrimination law?
Powell said Fed will go anywhere to find talent, recruit at many colleges, including historically black institutions.
Friday, retail sales, month over month. I don't know.
Chair Powell, days after his inauguration, President Trump issued an executive order on digital assets, which includes a prohibition on central bank digital currencies, or CBDCs. The executive order banned any, quote, form of digital money or monetary value denominated in the national unit of account that is a direct liability of central bank.
BBAI is absolutely juicing. Goodness gracious.
On ticker SPGC, Sandy Papa Golf Charlie shares RCD spiking activity new highs. SPG.
So we're coming up to a trend line. Well, it's only 2 points, so it's not a trend line, but it is potentially a spot.
But I do invite the chairman to respond to the gentlewoman's question on CBDCs in writing. And now we turn to the vice chair of the full committee, Bill Heisinger, the gentleman from Michigan.
Thank you, Mr. Chairman, and Chair Powell, good to see you again. You had talked a little bit about your review. I'm going to start there. Obviously, a lot has changed in the last 5 years. Pandemic, inflation, higher interest rates, name a few. However, I believe your dual mandate of maximum employment and stable prices should remain the ultimate objective. I assume you agree with that. I let the record reflect slight head nod on that, I guess. This committee is going to be very focused on monetary policy, and with my good friend.
That ticker INLF, Indian November Lima Foxtrot. Notable price action in the name, relatively light volume, new highs. INLF.
The ramification is cutting that much money. You don't think that in a budget of $6 trillion there might be some billions that probably we don't need to be spending? That's what I want gone. It's just the absolute waste.
GNRC Generac
Every
bonds
year
high
we
over
just
$50
waste so
now,
much
up
money.
about 6.5%.
We gotta stop. We have a spending problem. You can't tell me every dollar bill is perfectly spent in this government.
Do you believe
Not a
that the last policy
not a
framework
f***ing
limits
That ticker
chance.
Tesla, this week's 360 calls coming in active on Tesla. Share see new highs.
No.
Powell said
I'll tell you why we
Fed's
didn't
last
raise
policy
rates.
framework
We thought the
did not
inflation was
did not limit
transitory.
Fed's response
I
to
can show
inflation.
you
We and
forecasts
everyone
from the
thought it
end
would
of
be
2021
Soros?
by us,
I could
by
care
staff,
less who's
by
in there.
leadership. Everybody thought it was
I
gonna be
could
transitory.
care
That's why we didn't
less
raise rates.
who's in
I
there. If
also
they
distinctly
wanted to cut
remember
spending,
a,
go for it.
hearing where you and Secretary
S&P
Yellen
futures
at the
right
time
now.
were
But no one
sitting next
has.
to
That's
each
the
other,
thing.
and it looked like you
No one
basically
has.
scooted
26.
away when I asked you both whether it was
So I
still
even have my doubts that
transitory,
this is
and you
going to do
had, for the
anything.
First time ever, a separate answer.
And we're talking about
Your answer was yes, it
governments,
still was
agencies
transitory.
with players
You gave a very,
in those
Fed,
agencies that don't want
Fed
their money
speak
cut.
answer of, we no longer believe the
Like-
data shows that. So no.
It's a nice thought,
And
but I don't believe it when I
kind of
see
to
it.
Chair Hill's point, we think that might have been a little late on that. On back to the review, I'm curious, what sort of input are you looking for from the public
Trusting
and from
Trump to
Congress as
do
you
it
go into
when
that
he
review?
ran up the
So
deficit
from the
more than any
public,
other
we do
president in
a
history.
series of Fed Listens events, which were very successful the last time. And it involves us sitting down and meeting with people, some of whom know a lot about what the Fed does, some of whom just tell you what's going on in their communities. It was really, it was a very successful part of our outreach last time. In terms of Congress, you know, we'll keep you informed of our progress. We welcome anything you may offer.
Guess the words that I just
You
said
know,
just
it's a public,
went
we're
right
open to the
past you
public
when I
on this.
said
public
it's a
review
nice
as
thought, but
distinct
I'll
from
believe it when I
what
see
we were
it.
doing before, and so we're welcoming views from all over.
And not to get ahead of the chairman, but I look forward to us having more conversations about that with the working group. I want to switch topics and focus a bit back to the bank supervision.
Rejected right
Michael
off of that
Barr stepped down
9-10.
from his position as vice chair for supervision effective at the end of the month. And whether, frankly, President Trump fills that position is entirely up to him. But in the absence of a vice chair for supervision, you're still working, I think, on it. I think your quote to the chairman was, "There's no time for a holiday." Now, this vice chair of supervision is a Fed governor that has, frankly,
if this is a mentor Q level.
extraordinary powers and responsibilities. And ultimately, my question to you is, does the Fed really need a separate vice chair to complete its work? Now, I got here after the 2010 election, 2011, shortly after Dodd-Frank was passed. I know this vice chair position was created by Dodd-Frank. I've just been dealing with the echo effects now for the last going on 15 years of Dodd-Frank. Do we really need to have a separate vice chair of supervision?
No. One day max on
For many years,
BBAI
as you
is
know, we
around
did our business without a vice chair
960.
for supervision. What that
Says
means
the
is everything
call
goes through the
resistance.
full board.
And it was effective?
Gamma
It was, and
wall.
also
area?
there was less volatility.
Powell said before there was a Fed vice
explain
chair
that. Why
for
was there
supervision,
less
policy
volatility?
making
Well,
at the
because you've
Fed
got
was
a
less
group of
volatile.
7 people on the board, and there will be some as appointments change. There'll be some changes in the approach to regulation, but putting it all in a single person, admittedly just to recommend to the board, can lead to sort of some volatility in these things, which is really
Larger swings in policy?
larger swings in the kind of things, and that's not great for the institutions that we want to regulate. We want to have a
See what
good set
happens
of
here.
regulation that doesn't swing back and forth very much. The question of whether it's a good thing to have in the law is really one for you. But I will tell you, we will once Vice Chair Barr completes his term in a few weeks, we will continue
Powell
on
said we
until
can get
there's
our
a new
work
vice
done
chair for
even after
supervision,
Barr's
and we
resignation
can very
as
much get our work
vice
done.
Or if
chair
there
of
is one.
supervision.
So with that, Mr. Chairman, my time has expired.
Thank the Vice
Chuck
Chairman.
living in the future here.
Heise yields back.
Gotta mute
Recognize
him.
the gentleman from California, Mr. Sherman, for 5 minutes of questions.
Chairman Powell, you are the only bipartisan person or thing left in Washington. You were appointed by Obama. Trump gave you a promotion. Biden reappointed you, and you are the only Biden appointee not
Dude,
to
their
hear the
gain
words,
is so
"You're fired,"
off the
from
charts today.
Our president. So I hope we listen to what you have to say, because you're the only person that I can identify in Washington that has support on both sides of the aisle. Mr. Huizinga mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that should focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible for me to say.
Does the fact that you focus on employment as one of your dual mandates lead to lower unemployment, higher employment in our country?
It may do so. We do balance those things. To some extent, that may be right.
Chair Hill spoke about how important it is that you maintain your independence. I noticed that in light of the hiring freeze, the Fed has
thought I took
removed
more than
all its job postings.
did
I'm
on this.
hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the president's statement at 7:58 this morning, where he said interest rates should be lowered. He said it. Will that influence what the Fed actually does?
No.
I, as a practice, never comment on anything the president says, but I think people can be confident that we'll continue to keep our heads down, do our work, make our decisions based on what's happening in the economy, the outlook,
And
the balance of
statements
risks.
by elected
No
officials
change.
are not among the things that cause you to act one way or the other.
That's correct.
Thank you. And he went on to say, he said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute says that the policies that the president ran on will raise the CPI by between 4 and 7.5 points. And I think the biggest element of that is the proposed tariffs. If we have higher tariffs across the board, say 10 to 25%, would that increase the cost of living? And would an increase in the CPI or related indexes of the cost of living lead to higher interest rates?
You know, there are many organizations, public and
See what
private,
this
whose
does.
role is to speculate publicly about what this might be. What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of living, does that lead to higher interest rates? The CPI goes up or CPI?
EFRG levels.
If inflation goes up in general,
Yeah.
forget about tariffs. In general, of course, we will use our
Really
tools,
light
which is
volume.
the interest rate, to bring it back down to 2% over time.
Okay. Yesterday, you told the Senate we're going to release the stress test scenarios before we implement them. Will you take a holistic look at large bank capital requirements, including the risk-based capital ratios like Basel III endgame, stress testing, to make sure that you don't have a contraction in the ability of credit to Main Street businesses?
Yes.
Great. There's a proposal in Project 2025 that we abolish Fannie and Freddie. If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, as has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
The CFPB has been
More and salt.
put on ice, but all the regulations remain in force. So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into
have a great deal.
practice a CFPB that
e-bike?
enforces all the regulations that the Trump administration has tried to eliminate. Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could. Yeah.
I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Chair Powell, let's talk about the balance
Why don't you
sheet.
keep it then,
As
Saul?
we've discussed several times before, the consistent and massive growth of the federal debt creates long-run challenges for both the United States and saddles future generations with an onerous burden. But it also creates a challenging environment for the markets as the Treasury market expands in kind. As the Fed engages in quantitative tightening, allowing the Treasuries to roll off, the Fed is careful to ensure that there are ample reserves for the balance sheet. Could you briefly discuss the conditions that determine the ideal level of reserves?
Sure. So let me say that we intend to slow, and we have slowed, but then stop the process of shrinking our balance sheet at a time when we think that reserves are somewhat above the level that we judge to be consistent with our ample reserves framework. So what that means is we want reserves to be ample, meaning we don't want them to suddenly appear to be shortages of reserves. So we're going to think of where those shortages might appear, and we're going to put a buffer on top of that, because nothing good happens when there's not enough liquidity. So that's our overall framework. And right now, we feel like all the evidence suggests that reserves are still abundant, which is more than ample.
As you know, in early 2021, the Fed stated that it would invite comments on the supplemental leverage ratio. That has not happened yet. I've made the point that the growth of
VRAC's
the U.S.
moving,
Treasury
huh?
market paired with a decreased willingness of banks to
Is that
act
still
as
a bird flu
intermediaries
play?
is a major issue on the horizon. When former Treasury Secretary Yellen was before this committee last year, I asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying the SLR. She said it's something that the banking regulator should consider. Does the Fed plan to finally look at the SLR?
Yes, I believe we will. I have, for a long time, like others, been somewhat concerned about the levels of liquidity in the Treasury market. The amount of Treasuries has grown much faster than the intermediation capacity has grown, and one obvious thing to do is to reduce the effective supplemental leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers. The Federal Reserve is not immune to politics. You, like every Fed governor, go through a lengthy confirmation process in the Senate. And of course, you're required to answer to Congress in hearings like this. I can trace a major political turning point at the Fed to the passage of Dodd-Frank, which greatly expanded the Fed's regulation and supervision authority. Chairman Powell, do you worry that the independence of the Federal Reserve's monetary policy function is in any way hindered by its role as a bank regulator? Can you do both?
Well, we can and we do, and we'll continue to do that. Clearly, the regulatory and supervisory side is more contentious in political circles. But we will continue to carry it out as best we can. And
Meme
to do
coins.
so in
I
a
would stream it if I was good at it. I haven't gotten the process down yet. It's a whole different ball game. And I can't figure out a platform that allows me. Like I see this guy, the Jalen guy. I see him like one click buy, one click sell, and he's in and out quickly. Like I don't have access to that platform that he's using that allows it that fast. I've been using DEX, and every time I do a sell order, it gives me a pop-up, and then it tells me the slippage is not enough, and that's too slow. Like, you got to be fast. Phantom, I haven't, yeah, it's on the Phantom.
Central bank. So the concern was that at the slightest downturn, we'd be back.
Like, I don't know how yet.
We'd be stuck. So we were looking for ways to make up for that. So then the question is, we got this inflation out of the
I get how they
pandemic
look up,
and the
you know,
events
contract
related to it.
addresses,
Are we
search
in a
Twitter,
different place
whatever.
now?
I get
And
that
the
part.
chances are pretty
I got to
good
figure
that
out the buy and the
maybe
sell. They do it like
effective
market
rollback is
orders.
Still a concern, but it's not the base case anymore. It's
pretty crazy.
So we need to look at that and decide how that, what are the implications of that for our framework.
I mean, it's obviously not market orders, but you get the idea of what I'm trying to say.
Several more discussions on these topics. And with that, I yield back the balance of my time, and I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today, and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. In fact, around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war
Yeah, and he does
caused
all those guys, that group,
commodity prices
make a
to
ton.
move sharply
And it's all of the
back
quick
up.
orders, like
Does that sound correct to you, or familiar to you?
Yes, it does.
in, out
So,
in 5 seconds. I mean, it's
just
what
to
we do,
reiterate,
but in crypto
in this
form, and the moves are
interconnected
much
world
bigger.
that we live in,
But I can't figure out
would it be safe
what
to say
platform
that
allows me to be in and
economic
out that
instability in other
fast.
countries
I don't have access
has
to
the
bullocks,
potential to impact economic factors here in the United States?
and then that's what he was using.
Yes.
He was using another one, the
And so,
Photon.
given
How does
that fact,
Photon work? You don't connect your
would it
Phantom
seem
wallet to it,
like
right?
a
You have to.
smart
It's an actual
move
wallet inside the
for the
platform.
United States government to
You have a Bullocks
remove
code?
one of our most effective
Is it a pure
strategic
code, or is it
tools
someone else's that'll get you banned
that-
if you use it?
by mandate assist U.S. commercial interests
Connect Phantom
by
wallet to it.
supporting developing countries' economic growth and building countries,
Axiom book still
building countries'
everything.
capacity to participate in the world trade. Would you agree with that?
It's not for
Marsala,
me
what?
to be the judge or to say on that.
No, I don't want large clip. We're talking about
Did you know
shitter speed.
that a number of like U.S.
What's the
Well,
healthcare
if-
stock
if you-
selling off?
It's my
CNC,
code. I don't know
MOH,
about the whole
ELV.
getting banned thing. Yeah, you can. If you use other people's code,
agricultural
you get banned. That's what
products,
happened to
etc.
Jalen.
from American farmers, and in fact,
I don't know how to get a real
it
code.
helps the U.S. economy when you look at the volume of agricultural products that are
Axiom?
being bought.
Never heard of that
So
one.
that we can
Can you send me
continue
a
to
DM
be
link to
part
it,
of
please?
The rest of the world. Would that be correct?
As far as I know, yes.
So, today we find ourselves facing a situation where the president and his Dodge buddy Elon Musk seem hell-bent on dismantling USAID, no matter the consequences, even if they are dire. To me, the assault on this congressionally authorized body represents an attack on the rule of law and should outrage every
It's a 5-minute
member
cock there.
of this body. Every member, Democrats and Republicans alike. And I know that your interest is squarely within your dual mandate and not foreign policy. I sit on both committees. I'm here, but I'm also the ranking member on the Foreign Policy Committee. And so I can't sit here today and pretend that what we're doing won't impact employment and economic
It's
stability
back above that level.
right here in the United States of America. Weakening USAID will fuel global crises, endanger American security, embolden other nations like China and Russia, and leave us here in the Trump administration solely responsible for the fallout. So I have to take this opportunity to urge my colleagues on the other side of the aisle to also stand up for USAID. Anytime we travel, we go visit what they do. We go visit the good that they do. We go visit what their and how their economies improve so that they can be part of the global economy. So, if not because people just care about the rest of the world, then because we care about our country and recognize that instability elsewhere threatens our stability right here. It is extremely important in an interconnected world because the economy is interconnected around the world.
We gonna bust through this
We
level
cannot
here? What are we doing?
isolate ourselves from the rest of the world. I thank you, Mr. Chairman, And I yield back the balance of my time.
Gentleman yields back. The chair recognizes the gentleman from Texas, Mr. Sessions, for 5 minutes.
Mr. Chairman, thank you very much. Chairman Powell, welcome. We're delighted to be here, and I hope that this comes with greetings from every single member, that we appreciate and respect you taking the time, even though you're expected here. We think you show up, and we admire you. Mr. Chairman, you and I both know that way back when, and we assume 21,
Pretty tight 1 minute.
that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary
JP Morgan
stimulus to
layoffs.
the country. And I think
KDLY,
that
holy
there was about,
dung, what a
in
move.
my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount
All
of
right,
money
what are you gonna
that
do?
sits out there on the debt side. Could you please take a minute and discuss this issue?
I'll
and
ticker
how we should be
KDLY,
looking
Kilo
at it?
Delta Lima Yankee. Shares are seeing a spike in activity, new highs. KDLY.
Asset purchases that we made during the.
We are. We're
Okay.
talking about when the Fed went and sold
QE.
treasuries,
No, we bought treasuries.
bought treasuries.
Yeah, we bought treasuries. So, it was a
Go,
situation.
do it, do
I'll
it,
tell you
do
why
it,
we
do
did
it, do it.
We were just out of the worst part of the pandemic, and we didn't know frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging, and it actually, had a very strong wave right into 22.
Holy sellers.
We wanted to we didn't want to stop buying treasuries too soon.
Frickin'
because
eat it up.
what that has a
Lap it up.
stimulative effect on the economy, because we didn't want to provoke
Wrong way.
wanted tightening in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and we've done.
You moved it from about 120 a month to 110.
Well, we're down, we've been tapering for 2 years now, and we're down
That's
more than,
correct.
more than $2 trillion. So, and we're still going. So that's why we did what we did.
Tell me what that looks like in the longer term aggregate versus with what the chairman said, debt versus growth. Because we believe the debt remains and the growth is not equaling that ability to pay it back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're retiring Treasury securities. And the effect of that is to drive down long-term rates. That's the whole reason for QE.
And what are you paying for those long-term rates?
Market rates. We're paying exactly the market.
And what would that market be approximately?
Oh my gosh.
A year ago or to now?
Well, the 10-year, we're not.
Holy hell.
We're shrinking now.
Is your
But
congressman at work?
The 10-year was yielding a very, very low yield on it. Was quite low during the pandemic, extremely low, because growth was slow. There was a lot of demand for treasuries. So we were pushing down rates.
I mean,
to
I'm
support
dumb on
economic
bonds,
activity.
but
When you can't
and all the
lower
inner
policy
workings,
rate
but
anymore,
damn.
and you want to do more stimulus.
I'm not
that's
on this
really the main
freaking
thing to
committee
do. It's actually
asking
the
Jay
forefather
Powell
of that was Milton
questions
Friedman,
that you should know.
came up with that thought way back in the past. But that's what we did, and then, as I mentioned,
All right,
we turned around
925
as soon as
wall.
we
What
left
happens
office
here?
and
We
started
rip through it or
raising
not?
rates. We immediately started shrinking the balance sheet, and we've shrunk it a lot, $2 trillion and still counting.
You have shrunk it $2 trillion?
Yes, we have.
Okay. And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go.
Turn it up,
Actually,
yeah.
the level of reserves, which is the thing we're focused on, hasn't really changed. All of that has come out of what's called the overnight reverse
Just
repo
really loud
facility.
today.
I'd be happy to spend some time with you on this. This stuff is very complicated. And
Yes, I've
technical.
tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very,
called
very big changes since then.
127, 22. And
Yeah.
so the changes that you speak of are important,
Yeah,
and so I would appreciate that time.
be happy to do
Yes.
that.
Great. I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important. And I today spoke about the country. And I want to thank you for your service and time. Mr. Chairman, I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman, and
It's so
welcome,
the gain
Chair Powell.
on these microphones today
Chair
are
Powell.
off the charts.
I'm worried about these tariffs, and
The
I
AP
want
stream.
you
Can you link it
to
again, Pipe?
kind of share with us your thoughts on these tariffs. I'm worried about, I think the president is wrong here. Tariffs can cause a terrible situation to the economy. I'm concerned about the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost
Yeah, that's funny.
to these tariffs. And we need not move
Paste
into
links in
this
chat, but it's on
area
YouTube.
blindly.
You're a
And some of
subscriber. You
these
can paste
costs
links.
will be absorbed by business companies, but there are other costs that will be borne by the American consumers. We don't even understand this. And yet you have
Okay,
the
okay, I
president
see
just
you.
using these tariffs as a means of fight or like a war. And this is going to do it. Everybody is not going to be Mexico or Canada. And while we got a little time, I want your thoughts on the dangers of these tariffs. The stock market is anticipating rate cuts. What will these tariffs do about that? Does the Fed see financial market stability as a factor in this decision-making
What is the
process
CNBC I'm on?
when considering
try
the
to
rate
press.
cuts? And here is specifically what I want you to get. Financial market stability as a factor in this decision-making process when considering
Oh
the
yeah, that's
rate
way better.
cuts. And here is specifically what I want you to get to. In light of the president, and politely I will say, his ill-crafted tariff strategy.
And it's so
do you
funny that he
foresee
sounds
future rate
normal
cuts
at
as a result
2x.
of inflationary issues or due to a weaker labor market? And what do you consider to be
AIF,
promising
AIFF.
inflation rate? That's how
Let's close that out.
fight. And these tariffs
Has a
are
5
gonna
minute.
just add to
Pretty tight.
inflation, like a rocket ship. Your thoughts
So,
and share with us.
It's
Give
all
us
caught
your
up.
opinion of the danger of these. There's a cost here. Tell us what you think about that.
the president has certain authorities over tariffs. Congress has authorities over tariffs. The Commerce Department is involved in some ways, but the Fed has no role in setting tariffs. And we don't comment
All right,
on
it's
decisions
cocking
made
again,
by
so
those who
a little
do have
bit
that
later.
authority. We try to stick to
Maybe.
our own knitting. In this particular case, it's possible that the economy would evolve in ways that, because of tariffs, or partly because of tariffs, that we would need to do something with our policy rate, but we can't know what that is until we actually know what policies are enacted. And remember, it's not just tariffs. There are significant changes to immigration policy, fiscal policy, and also regulatory policy. You put all four of those, and all four of those were things that the president was elected to do. We will then try to make an intelligent judgment about the overall effect on the economy of those, and conduct our policy accordingly. But it's not our role in any way to comment on the wisdom of the policies that are enacted by Congress or by the administration.
Oh, wait.
Well,
Came right
he
back up.
have an effect on whether or not you will resume your plan to cut the interest rates this year or continue to hold.
So we'll make our decisions as we go about what to do
hell?
with interest rates based on the data that we see, the outlook, the evolving outlook, and the balance of risks. And we'll be considering all of those things. We won't be focusing on any particular policy, and I can't tell you
Z
what
juice
we'll
in
be
there.
doing, because
Not
it
sure
will
what's
really
up with
depend. It's fairly uncertain environment right now.
Yeah.
The underlying economy is very strong, but there's some uncertainty out there about new policies. We're just going to have to wait and see what the effects of those policies are before we think about what we can do.
Well, all I want to say, God
Orange
bless you.
size.
I know your strength. We've worked together over the years on many things, and this nation is grateful that we have you, your wisdom and intellect at this time.
I agree, but the gentleman's time has expired. Gentleman, you're back. Chair now recognizes the gentlelady from Missouri, Ms. Wagner.
I thank the chair, and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit with a
There we go.
huge stealth tax from, as we've spoken about, inflation. That drove up grocery prices and
All
led
right.
to high rates on things like
Get back up
mortgages
here.
and
This 80 and do
car
it.
loans. Since 2021,
Holy
the
price
average
action.
Missouri
What is
household
that?
is paying about $1,100 more per month due to inflation. To put that number into perspective, the median family income in Missouri is $69,000. These families have had to spend
Dude, what is this price action?
$13,000 more of their annual income on the exact same goods. What specifically is the Federal Reserve's plan for making life easier for everyday Americans?
So the best thing we can do for Americans is to vigorously pursue both stable
Addicted
prices
Hilo?
and
This should have
maximum
absolutely
profits.
juiced. 5
We're
minute
trying to
cut
get back to a
go,
long expansion,
and it's not.
Prices are stable around
Another-
2%.
You seem to be there on labor, as you've pointed out, so tell me what else?
Sorry?
You seem to be there on labor, so what else?
I would say we're close but not there on inflation. And you did see today's inflation print, which
Ooh.
says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now so that we can see.
We're definitely not there for 30-year mortgages, upwards of 7%, Chair Powell. So let me switch topics. I continue to believe that as we've spoken
Shots fired.
about, and as was brought up prior colleagues here,
I don't
that
like this.
the
I'm
federal
out.
banking agencies, including the Federal Reserve, should
I like it.
scrap the flawed Basel III endgame proposal and start over. You talked a little bit about how you plan to perhaps do that, and
Got another
and
5
a
minute here.
timeline
This is a
potentially.
very tricky
But how
spot
will the public, Chair Powell,
for
be able to
BBAI.
provide
If this
comments on
5 minute
any
fails, this
revised
might
proposal
be an
as
overall
required
rejection of
by
the
Administrative
other two
Procedures Act?
peaks.
So I fully expect, and I think it's a good idea for the United States to finish Basel III
A
in a way that's
notes on ticker SNES, Sandy November Echo Sandy. It's reports from ABC. Rat birth control and rat walks are among new initiatives to curb New York City's rat population. That's a piece
we'll
from
put all
ABC
of that
News
out for
coming out.
comment again.
ABC
was,
News.
Welcome the comments for all commenters.
I should make sure we're following the Administrative Procedure Act.
Oh, yes.
As you move
We
forward.
will. We will.
Chair Powell, I
At 8 a.m.
understand you are
Eastern,
interested
now
in
being
making the
circulated,
stress test
SNES, a
scenarios
possible positive
that
catalyst.
assess how a bank will perform through a crisis more transparent. As things stand now, while the Fed
Save the
may make
rats.
some information public, it doesn't show its map,
AGH
which makes it
IPO
difficult
open.
to assess the robustness and analytical rigor of the stress test. Recently, the Federal
what do
Reserve
they have,
announced
like,
that due
some
to
kind of
the,
rat
quote, evolving legal
thingy thing?
landscape, it would begin to take public comment on its stress test models and annual scenarios. Can you describe describe the changes in the legal landscape that have caused the Federal Reserve to suddenly seek public comment on its stress test regime and why it did not seek public comment from the beginning?
So we're an agency that's strongly committed to following the law as written by Congress and as interpreted by the Supreme Court. In the past few years, we've seen a string of administrative law cases from the Supreme Court, which are dealing with different issues, but there's a common theme, and that is significantly less deference to the views of agencies as compared to those of courts. Also, just a raised expectations for compliance with the Administrative Procedures Act. We take that very much to heart, and this is one of the things that we're doing because of that. And we feel
You
appropriate.
can look at things like Chevron deference. You can look at the EPA ruling by the courts, and they are returning the power back to the people and the Congress, not the administrative state, not those agencies and rulemakers.
So because of those things, we are putting, as you went through it, we're putting the models and everything else out for comment and taking similar steps.
Well, I'm glad to see that. I understand the Fed intends to complete a comprehensive review of its monetary policy strategy, tools, and communications.
Well, that's not moving.
practices. You mentioned
So,
that. What is the timeline?
Moving on.
We expect to complete our work and announce the results by the end of the summer.
End of the summer. Thank you. Are you
Tight
okay?
on
Lady
BBAI.
yields back. The chair recognizes the gentleman from Massachusetts, Mr. Lynch, for 5 minutes.
Thank you, Mr. Chairman. Welcome, Chair Powell. Good to see you. Thank you for your good work.
Word AI was not mentioned.
Chairman Powell,
funny.
the Senate just filed a bill.
Yosh hitting
called the
1475.
Genius Act.
What
I'm always
timeline
worried
am I
about
on?
anything that comes over from the Senate with the title Genius.
Oh, yeah.
But it is an attempt to provide a regulatory framework for cryptocurrency.
Hey.
And in that proposal, which is similar in some respects to the House proposal, it would allow individual states to oversee issuers, and there would be no central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern is that with that spread of an expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of
Some
an
things
expansion
you
of
just never
crypto
thought you'd
will
hear.
infect the traditional banking
Blows my
system
mind.
because it's
5 years
a
ago, none of us
volatile,
thought this conversation would be
speculative asset,
happening on the House
and,
floor right now.
We've seen some
about crypto.
very sudden disasters.
Here
with
we are.
crypto. I'm just wondering, are there any
Now, if he says shitcoin,
backstops that we can
I'm
use,
turning the stream off.
firewalls that we can put in place that might
If he says
insulate
shitcoin, I'm turning it off.
traditional banking system, because they have access to the discount window and they're FDIC insured, so there may be, second order impacts if we
Giving
have
back a lot here. I need to
collapse of
slow it
major
down a bit.
Crypto issuer. Are there any extra things that we can do to protect the traditional banking system?
Yes. So first, I would say there are really two things.
I took a YOSH Yankee Oscar Sandy Hotel shares are seeing an increase of activity, new highs.
Get in the way of banks
YOSH.
serving perfectly legal customers as long as they understand the risks and that sort of thing. We don't want to single out any particular.
Are you speaking to custody?
Well, custody is more.
5 minute
second
would be
thing. It's
9:16
taking
break.
Activities on their own, right? And in that case, I do think it's appropriate
Yosh
to
at 15. Holy
as
jeez.
usual, as bank supervisors, make sure that we understand and banks understand the risks that are involved in the activity that they're taking inside an insured depository. On the other hand, you don't want to go too far. I think there were
Mac
a
D
bunch
needs
of
to flip on that
disasters, as we
sucker.
all remember. And, we don't want to, and we were reacting to some extent to those. You don't want to go so far as to, overplay your hand on that. So I think we need to be mindful that many of these activities can very well be done inside of banks, and custody may well be one of them. In fact, in Fed-regulated banks, there are lots of crypto activities happening now. They've just happened under a framework where we made sure that the bank understood and we understood exactly what they're doing.
Right. We also have the example of, Silicon Valley Bank and Signature Bank, First Republic Bank. One of the triggering events there. I mean, obviously the risk management was very poor in that respect, and they got on the wrong side of interest rates. But there were also some failures.
Is this gonna go?
Of issuers who had huge deposits at Silicon Valley, I believe, or Signature, or maybe both of them, and the suddenness of their collapse caused a run for the exits, and
Still not crossed out.
luckily,
Hesitant on
with
this.
the scramble, we were able to sort of save that situation, so it didn't create a greater contagion. But are there steps that we can take that might strengthen our ability to respond to that type of collapse as well?
Yes, so in the wake of Silicon Valley Bank, we did work with many medium and sized banks that had any of the characteristics that we saw. And you mentioned, a long position in long-term securities that was underwater, along with a very unstable deposit base made up mostly of uninsured deposits. And in the case of Silicon Valley Bank, it was a lot of similar private equity and venture capital and hedge fund companies where they all just pulled their money out at the same time. So it was a bank.
And Yosh back down under 13 or 14.
We looked for that pattern. We worked with companies who had any aspect of that pattern, and we were successful, I think, in not having that crisis spread very broadly, and that was a good thing. Looking
Still
forward,
not
though,
flipped up.
We need to not forget.
Give
that
us a
lesson
failed cuck right here. That would do
make
it.
sure that funding bases
All right, here's your
are
cuck.
stable, and that we're focused on the basics of banking, which is
This
credit
does
risk,
nothing.
interest rate risk,
The next candle over
liquidity
candle
risk.
has
Gentleman's time's
potential.
expired.
Thank you. I yield back.
Gentleman yields back.
AIFF
Chair
down
recognizes the
again.
gentleman from Kentucky, Mr. Barr, for 5 minutes.
Chairman Powell, let me ask you a quick monetary policy question and then turn to bank regulation and treasury market structure. I know hindsight is 20/20, but it's important to learn from mistakes, as you know, and you've conceded that the Fed miscalculated on inflation and mischaracterized inflation as transitory in 2021-2022 time period. Given that inflation remains stuck above the Fed's 2% target, will you commit to scrapping the flexible average inflation targeting framework? And if not, why wouldn't you commit to returning just to a simple 2% target?
So we're just beginning the review. It'll be done, as I mentioned, by the end of the summer, and that's the exact question we'll be asking. I can't commit to a particular outcome. I need to respect the process and the views of the other 18 participants on the FOMC.
Yeah, I appreciate that, and I just hope that in that process that you and your colleagues recognize that framework allowed rising inflation to persist and allowed the Fed to mislabel it as transitory. Let me turn to bank regulation. In October of last year, I led a bipartisan CODEL to Basel, Switzerland, met with the Basel Committee on Bank Supervision, and there the committee actually conceded to us, agreed with me that the Michael Barr proposal of July 2023 actually gold-plated bank capital requirements, and instead of actually promoting international harmonization, actually made American banks less competitive. They conceded that to us. So I applaud the Fed for not moving forward on that July 2023 proposal that would have made it harder for large banks
Go look at that AGH.
to, among other things, facilitate the smooth functioning of the U.S. Treasury market, including holding treasuries on the balance sheet. Couple questions. One is, should the goal of our bank capital rules, should it be regulatory harmonization internationally, or should it be American economic competitiveness?
I mean, clearly, the goal is to have a strong banking system that supports American economic activity and growth. That's the ultimate goal. What you get from Basel is a global floor so that the other banks can't run on less capital and sort of have a short-term advantage. That was the whole point of Basel, was to get everybody to the same kind of level so that it wouldn't be the race to the bottom.
And I see that utility, but I think the goal of our regulatory system should be America first, and it should be about American economic growth and competitiveness. But let's talk about the Treasury market issues. Obviously, we're issuing a ton of debt right now. In fact, according to BlackRock, we're issuing $573 billion of Treasury bonds every week. To put that in perspective, the entire national debt of Australia is $573 billion. So we're issuing Australia every week in this country, if you want to think of it that way. Would reducing excessive capital and liquidity requirements on U.S. banks for intermediating U.S. Treasury market take the heat off of U.S. capital markets and increase Treasury market liquidity and stability?
I strongly think it would help.
Well, I think that's especially an important comment in terms of your regulatory approach, because, as you know, maturing bonds were being financed at an average of near zero during COVID, and now They're about double the cost of the average of about 3.5%. So now is not the time to make it more difficult for banks to hold treasuries. Let me just drill down with a little bit more detail on this treasury market structure issue. Do you agree that the supplementary leverage ratio and the enhanced supplemental leverage ratio, the ESLR, are problematic as they create a disincentive for banks, especially large banks, broker-dealer affiliates, to serve as intermediators in the primary, secondary, and repo markets for U.S. Treasury securities?
I do.
And so you would commit to reviewing the SLR framework to create greater capacity for our banks to provide liquidity in the Treasury market?
I think it's time to move on the.
Hey, note the ticker PSQH, Papa Sandy Quebec Hotel. Note CEO is tweeting that his brother-in-law has been appointed to a leadership post at U.S. Department of
Finally,
Transportation.
yesterday, during your appearance
That shows a PSQH getting activity on that.
Brother-in-law? We're going to juice the stock because of his brother-in-law.
Consumer protection laws if the CFPB is abolished.
Sure, why not?
Isn't it true, Chairman Powell, that prior to Dodd-Frank, consumer protection laws were implemented by financial institutions' primary prudential?
Why not? That's the kind of market we're in.
So if there were a decision by the Congress and DOJ or whatever to repeal the CFPB, we could return the consumer protection law enforcement function to other financial regulators.
You could, yes.
Thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you, Mr. Chairman. I thank the ranking member as well, and would like to associate myself with the comments of the ranking member. And Mr. Powell, I would like to compliment you for standing up to the president, for literally preserving the independence of the Fed. It was one of those pivotal moments in time. It would have been more than your simply resigning. It would have been the president taking control of the Fed with one of his Pluto puppets. Mr. Powell, I'd like to speak to you now about the process of collecting tariffs. When the tariff is collected, at what point does that actually happen? If we impose a tariff, product is coming into the country, where is that tariff collected?
Great question. I'm not an expert on that. I'm going to say the Customs Bureau collects it, but I stand to be corrected by anyone who.
I believe you're correct. That's what my research reveals. Permit me to extend this. When it is collected, it goes into a coffer. I believe we call that coffer the general fund. Is this correct?
I don't know, actually.
It does. The tariff goes into the general fund. A tariff is another way of saying tax, I believe, for many people. Is that a fair statement?
It is sometimes characterized as a tax.
So if the president imposes a tariff, which is a tax, and the tax is collected by some entity before it actually, on the product before it gets into the country, then the president is putting tax dollars into a general fund such that they may at some point, and these dollars, by the way, are coming from the consumer, at some point they may be used to cover some of the appropriations of this very House that the president has enormous control over. So in a sense, what the president can do is aid with the payment of what he would call a tax break, but aid with putting dollars in the pockets of his billionaire buddies that he collects on the tariff that the people in this country ultimately have to cover. I think that the president, while he seems to always avoid the question of how the tariffs are going to be
Yosh coming right back up towards high day.
he knows that he can at some point use that money to help pay the taxes that he plans to return to his
The ticker ELV shares are continuing to sell off. New lows on
way
ELV.
of doing business to require the consumer to fund tax breaks. I think this president knows what he's doing.
Spreads on
I
that's
think he
disgusting.
believes that the very wealthy need more to do more, and that the poor can do more with less. I don't agree with it, and I will do all that I can to prevent it. I yield back the balance of my time.
Gentleman yields back the balance of his time. The chair recognizes the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman. Over here, Mr. Powell, thank you. Good to see you.
How are you?
All right. The Federal Reserve recently withdrew from the network for greening the financial system, stating that its work had extended beyond the Fed's statutory mandate. While I agree with this decision, I still have concerns with how previous Fed policies may have discouraged lending to traditional energy sectors like oil and gas, and it should not be the role of the government and the Federal Reserve to be in the business of picking winners and losers. So my question is, can you clarify whether the Fed will ensure that financial institutions are not pressured to making lending decisions based on political or climate considerations rather than sound financial risk analysis?
I confirm that is not our policy. That would be inappropriate and that absolutely not something we should be doing.
Okay, thank you. The Basel Committee on Banking Supervision intended for the Basel III Endgame proposal changes to be implemented in a capital-neutral manner to ensure a level playing field for U.S. banks. Following this intent, the previous Federal Reserve Vice Chair for Supervision initiated implementation efforts with capital neutrality in mind. However, his successor politicized the process, imposing harsher requirements that exceeded BS recommendations. And this approach not only made the proposal more difficult for banks and their customers, but also weakened U.S. banks' global competitiveness.
Yeah, it's got to wait. I mean, it's changing direction right now, so got that going.
Mr. Chairman, will the Federal Reserve commit to conducting a more thorough economic impact analysis before finalizing any
Palantir CEO Alex Karp, AMA live stream at 12 o'clock.
Yes.
We might have to tune into that. We might have to tune into that.
And regional banks, which do not pose systematic or systemic risk for yet they face many of the same capital and compliance requirements as the largest institutions. So many of these banks serve as lifelines for small businesses, rural communities. And it's key for the Federal Reserve to protect these institutions and ensure that they are not subject to one-size-fits-all regulations. So, Mr. Chairman, what steps is the Federal Reserve taking to ensure that new regulations do not force consolidation in the banking industry, therefore make it a little harder for smaller institutions to compete?
So like everybody else, we see the consolidation that's happened really over the last 30, 40 years, and community banks going out of business and just fewer and fewer banks. And we know that may be happening due to technology and various things, but we and also just people moving to cities and away from rural areas. But we don't want our regulation to in any way foster that. So we try hard, I try as hard as we can to make sure that we're not letting the heavier regulation that we apply to the GSIBs and even to the regionals slip down to smaller.
BAC talking 3,500 gold.
And generally doing a good job at that. And we try hard to do that. This is tailoring. It's very much of a basic value.
So I'm not so interested in a high day break here. Last high day break.
And I won't say we're perfect, but we do
broke and sold off. So I would want to see a break in the whole.
Good to see you. And with that, I yield
before I get excited.
Mr. Chairman.
Gentleman yields back the balance this time. The chair turns to the gentleman from Missouri, Mr. Cleaver, for 5
Missouri.
minutes.
Thank you, Mr. Chairman. Thanks to our very capable and courageous ranking member. Mr. Chairman, thank you for being here today. As you know, my words, the CFPB has been disemboweled over the last 10 days or so, which probably people, there may not be much concern here on the Hill in certain quarters, but there are two things that I want to ask you about. Rules over at CFPB must be, from time to time, updated. Right now, there is no system for updating any of the rules.
Any big earnings today? I'm sure there is.
Other issues is that
I haven't checked the list.
Is there a regulatory gap, or are there regulatory gaps that you can see clearly that people can feel because there is essentially no CFPB for the first time since the end of the Great Recession.
So I don't think we know where this comes to rest. You may have seen last night that the administration nominated somebody to be the permanent head of the CFPB. So I don't know I'm not sure what the end intention is here, but if you assume that it goes away, then yeah, there would be a gap. But there wouldn't be any federal
you should put some
agency that can examine banks above 10 billion, whether they're state member banks or state non-member banks or national banks. That would be the case. But I'm not sure we know what the end game really is here.
In terms of regulatory gaps that are created when the agency was essentially shut down. Now, I'm assuming that there's been somebody appointed to complete the murder of the CFPB, and so if I'm correct, that means that there are some there have to be, or either or they've been tricking us all these years that they were not doing any regulations. But that's my political position. I was very proud in my community to get the Hispanic Chamber and the Black Chambers to come together. We got a building, they're functioning, big celebration all across my congressional district in Missouri. And then, about 2 weeks ago, I started getting these phone calls, as I think many of us on both sides of the aisle have received. About 64% of small businesses have invoices
13 G's are today?
Unpaid for more than 60 days. And the Fed now, the Fed's real-time payment system allows individuals and small businesses to send and receive money instantly, which is a step in the right direction, Mr. Chairman. What is the status of the Fed Now adoption for financial institutions?
So it's coming along, as was the case with ACH.
KDLY.
It takes quite
There's
a
your
while.
break.
There's investment that has to take place.
See if that 360 can
banks,
hold.
and so we're working with a lot of small and medium-sized banks to get them comfortable with the requirements of FedNow, so that this can build up over time. It's something that we expected to be slow in terms of uptake, and it has been a bit slow.
Well, is technology adoption a barrier for smaller community banks and mission-based lenders?
Yes, it is, and so we work with there are non-bank service providers that do reach out and do a good job with smaller institutions, and we encourage that. Those institutions can't actually have direct access, but their business is they have the information, and they can go to smaller institutions and show them how to do
this is really light volume. Jeez.
And we encourage that.
Thank you. Let me just say, I've been here on this committee for 20 years, and I've seen chairmen, Republicans and Democrats, and whether they are Republican or Democrat, they need to be independent. Thank you, Mr. Chairman.
Gentleman's time has expired. Gentleman yields back. The chair recognizes the gentleman from Ohio, Mr. Davidson, for 5 minutes.
Thank you. Thanks for joining us today, Chairman Powell. First, I want to reflect on our hearing on February 24th here in this same room, frankly, via Zoom for a lot of people because it was in the height of COVID. And during my 5 minutes, you felt confident that inflation being at 1.4% would stay under control, and it wouldn't be an issue despite the very large increase in the supply of money. We talked about M2. In a subsequent meeting, frankly, in my office, we discussed Milton Friedman's quantity theory of money in depth, and you believed that it was no longer relevant, that inflation would not hit consumers. We debated asset prices during the hearing, and you claimed that the Federal Reserve's massive purchases of treasuries did not distort the market. Lastly, during the Biden administration, you were actively calling for more fiscal stimulus at times. And at some point along the way, more dollars chasing fewer goods seems to have actually resulted in higher prices. All of these things, inflated money supply, inflated asset prices, inflated consumer prices, happened on your watch. In light of the actual outcomes, have your views changed?
Well, I think we've learned a lot, but maybe not the lessons you think. But I do think we've learned a lot from the situation. We and essentially all of mainstream macroeconomics thought that this would be transitory, and and what that meant was it would go away fairly quickly as the supply side healed and as demand came down. And it didn't. It actually did go away, and substantially for those reasons. But it took 2 years.
And to that point, you felt like in the fall that it was going away and things were going to be under control, and you had achieved your soft landing. But the market pretty quickly spoke. I mean, frankly, rates went up over 100 basis points where you guys were going down. And now, in today's reports, we see that inflation's actually trending up quite a bit from where it was in the fall. So, again, would you, in light of the facts, would you reassess what you're doing with the central planning?
You're right that long-term rates went up, but they did not go up because of expectations of higher inflation. There's no evidence of that. It's actually different things. It's not about inflation.
Well,
look at markets. Markets are pricing in break-evens. I'll show you the.
So the markets don't believe there's increased risk with massive fiscal spending in the market, and they're not demanding a higher premium because there's more risk.
More risk, yes, but not more risk of it's not mainly about.
And when you see
inflation.
asset price inflation and rate inflation, doesn't that result in consumer price inflation?
It's not a question of that. You're saying that the rate increases at the long end are caused by expectations of higher inflation.
They certainly influence
largely
the inflation.
Not true.
And if they don't influence the inflation, why do you guys try to steer inflation by controlling the rates? I mean, the reality is you've got pressure, including from the president, to lower rates. Are you going to be able to get lower inflation with lower interest rates?
I think our policy's in a good place. I think inflation has come down from high levels to 2.6% last year. My colleagues and I are holding where we are, awaiting further evidence of inflation.
A lot of the data that you guys are looking at lag, just like when you said it was 1.4% and everything's fine. I think a lot of people said, it's not fine. You got to go out and talk to regular people. And constituents in Southwest Ohio, just like all over the country, aren't saying they're fine. And they might go that the rate of increase is slowed down
for a 5-minute
but they know that
here
the
after
prices aren't going down. They're still getting hit pretty hard. And meanwhile, you guys still continue some of these policies. Like you're paying banks still not to put their capital at risk in the market. Interest on excess reserves going back prior to the 08-09 financial crisis, you didn't even pay banks for reserves. Now you're paying them for an unlimited amount of reserves that they want to hold on it. To what extent is that distorting the market by pulling capital out of the market?
None, not at all. You're right, though. People are unhappy about the price level, and that's what we need is several years of real wages moving up higher than inflation.
Okay, so if they're having no impact at all, why is the Fed paying the interest? What is the rationale for the policy? Is it monetary policy or is it regulatory policy?
It's how
because as Chairman Barr pointed out, you guys are effectively gold-plating the standards, and the U.S. is actually holding way more reserves than we're required to. And part of that is IOER.
So what's your question?
If it's not distorting the market, what's the purpose for doing it? What if it has no impact on the market? Why are you doing it?
It's the way we control. It's the way we exercise interest rate control in the market. I didn't say it doesn't.
Because it has an impact, and so I will have questions for the record, and I yield back.
Gentleman yields back. The chair recognizes the gentlelady from Ohio, Ms. Beatty, for 5 minutes.
Good morning, Chairman Powell, and thank you for being here. I want to thank you for your leadership at the Fed over the last 7 years, which I've had the pleasure of being here that entire time. Under both Republican and Democratic presidents through an unprecedented pandemic and certainly an uncertain economy. Your apolitical guidance is a testimony to the historic independence of the Federal Reserve, which is absolutely essential for you to carry out your mandate, keep prices stable, and achieve maximum unemployment. Over the last few years, inflation, as we all have witnessed, has come down from a high of 9.1% in 2022 to about 2.8%. During your tenure under President Biden, we saw the unemployment rate drop to a staggering 3.4% in 2023, its lowest rate that we've seen in some 55 years. And now it sits at around 4.1%, which is still low by historic standards. Although the economy has a way to go, and American families, as we've heard throughout today, are still struggling to pay for expensive groceries and gas, and the list goes on. It is truly remarkable what the Fed
I'm really
has
trying to get
managed
this
to
range.
achieve over the
The
last
FRG just went high
few
day.
years. Chairman Powell, while I have sat on this committee, you and I have frequently discussed the importance of representation at the Federal Reserve and the
Almost.
benefits of recruiting the best
Appeal
and
to our
the
5-minute
brightest that this
go
country
potential.
has to offer by broadening the talent pool. The Fed has been a great partner to this committee on this issue, which, as everyone knows, has been very personal to me. However, the White House recently attacked on these very basic concepts are incredibly concerning to me, as many of my Democratic
How can I
colleagues.
watch? I have multiple charts up on different screens. Andy, I went. Hello.
So I'm just going to ask and enforcement agencies to maintain offices dedicated to recruiting from a broad talent base and fostering an inclusive workplace. Yes or no?
Yes.
I am pleased to hear, as my ranking member mentioned OMWI, and also talked about implementing it under Dodd-Frank Section 342. But I also am pleased to see that the Fed recruits from Ohio schools, and I'm from that great state of Ohio. Institutions like
Right back
the
up.
Ohio State University.
What are we doing here?
Western Reserve.
Look how tight these
University,
damn Bollinger Bands are. What are we doing here?
Kenyon University in Oberlin. Do you agree that hiring the best and the brightest, whether it's an economist, whether it's an analyst, a lawyer, a researcher, or IT professionals, that this country has to offer means that you don't have to recruit just from Ivy League schools, but you can.
This move's gonna be
find
massive, but I'm gonna
these
chopped up before it even
individuals,
goes.
whether it's an HBCU or it's also a state school. Have you found success in recruiting from those universities?
Yes, we have.
Thank you. Do you agree that these recruitment programs at their core do in fact prioritize merit and skill and simply expand the pool of candidates being considerate?
Yes.
Do you agree that the Federal Reserve has directly and concretely benefited from initiatives to attract, hire, and retain a highly skilled and diverse workforce?
I do.
As I mentioned at the top, the United States economy has come a long way since the pandemic and peak inflation, but hardworking families still are struggling. Last night, I was in a store, night before last, eggs here in Washington, D.C., $14.99.
$14.99 in DC for a dozen eggs.
The Fed's dual mandate. We're seeing reports.
We all need to get some freaking chickens.
From the Department of Government Efficiency's attempt to conduct massive layoffs.
Thank you,
Do
Tim.
these policies, whether
Yesterday
you
was a
agree
really
with
good
them or
day.
not, affect the labor market, unemployment?
Is that what she just
in the
said?
United States economy, and how does the Fed plan to achieve maximum employment during these circumstances?
Damn, dude.
We have 170 million people in the labor force. So these are, they would affect the numbers technically, but it's not clear that it would be material.
Okay. Thank you, and my time is up. I yield back. And thank you again for being here.
The gentlewoman yields back. The gentleman from Georgia, Mr. Lowry.
I note that
recognized.
Tulsi Gabbard has
Thank you, Mr. Chairman.
been confirmed as Director of National Intelligence. Note Disclosure Holdings, including Rumble, Tesla, and Bitcoin on that note.
The ranking member in her remarks take a sudden interest in data privacy, and especially information regarding individuals' transactions, when in the IRA bill, they worked very hard to force banks to report the financial transactions of individuals at $600. However, data privacy is something that I have been very serious about since I've been here. I've been fighting the Securities Exchange Commission
Stop
with their
out.
unconstitutional
Again.
acquisition of PII from individual investors. We're attempting to reform and modernize the Bank Secrecy Act to limit the amount of information taken from individuals. And, they often turned a blind eye to the abuses by the CFPB. But it's encouraging to know that they're finally interested in some level of data privacy. I bring that up because there's something about data and data security I want to ask you about. The U.S. Department of Justice announced that it was prosecuting a senior Federal Reserve official for economic espionage.
Stuff. Interesting.
This just came out in the past few days. This economist, who apparently had access to sensitive monetary policy documents, allegedly provided non-public information to representatives of the Chinese Communist Party. And I know you're limited in what you can share about this case in a public setting, but to say that I'm concerned would be, as others, be an understatement. In what you can share with us, if you will please answer a few of these questions, do you know what kinds of sensitive non-public information would this individual have access to in his role at the Federal Reserve?
Him personally, no, I don't.
At 2:30 a share.
I really don't know the facts of the case, and I couldn't comment. But
okay, just assuming certain types of information from the role he's in, is there any idea if information was provided to the CCP, what advantages would that give them?
Without knowing what it is, I can tell you what staffers generally get, which is kind of the economic analysis that we do in advance of an FOMC meeting. And, in modern central banking,
Let's take a Serve Robotics SERV. Shares are seeing a bump in activity, new highs. SERV.
Dismissing this case, which we take very, very seriously, just as you do. But we really, the truth is, what we have that is secret is knowledge of what we're going to do in the future. And in modern central banking, the whole idea is to be transparent about what you're going to do. So, nonetheless, we take this case very seriously.
So,
to your question.
Yeah, and I appreciate it. And this is not adversarial at all. I'm really just trying to get to
my next theory for Jimmy and Roy and Kitty. Who knows, man? He stopped tweeting during market hours, and that's a little telling, honestly. His last tweets have all been after 8 o'clock, when even after hours was shut down. So I wonder if he's getting a little heat for moving markets.
Very strict information handling requirements. We do background checks on every Federal Reserve employee.
Someone got to him.
We start those before they start working there. We do everything we can on this, but
obviously certain things.
Sure, that's what we're talking about.
Do happen, and people.
We're kidding.
Correct. Do you see
yes, it is,
there is? Does this open the door for a more strategic analysis of the Federal Reserve and how to protect critical economic information?
Yeah, I do think that, once we see this unfold a little bit and know what the facts are, I think we'll absolutely look and make sure that our controls and that employees understand the consequences of this, and I think they do. But, with a few thousand employees, there's going to be one sometimes that breaks the rules. And I can't comment on this case, but
and I understand it's sensitive. But as things move forward, I'd ask if you could, at some point, share with me and this committee more information so we can work with you to make sure that our nation's policies are kept just to those, more so kept away from our adversaries. And with that,
Mr. Be glad to do that.
Gentleman yields back.
I see you,
California,
Pipe Candy.
Mr. Vargas, ranking member on our Monetary Policy Task Force, recognized for 5 minutes.
I am summoned and
Thank you
unable
very much, Mr. Chairman.
to paste any text in
Chairman
chat.
Powell, thank you. I don't want to insult you in any way, but
I see your
hear
text
you're a
fine, Pipe.
I'll own up to that.
So I assume that with a few words, oftentimes you would know one of the songs of
Maybe,
the
geez.
Grateful Dead.
Maybe.
So I'm going to give you here
But what if?
a quote to see if you know who said this. The risk of a dispute over the position could be a distraction, to our mission. Do you know who said that?
No, I don't.
Michael Barr did. And I would be remiss if I didn't say and mention that what Governor Barr did recently was very selfless and noble. The rest of that quote, by the way, is, in the current environment, I've determined that would be more effective in serving the American people from my role as a governor. So I think he himself took the position that it would be a distraction to continue in that role. I personally think he's a person of great distinction that always managed himself in a way that was appropriate, and I appreciate
On ticker SBET, Sandy Bravo Echo Tango, no shares or seen spike in activity, no social media circulations on the name SBET.
With him our disagreement, and again, I just want to thank him, because I think what he just did is what a lot of people can't do, and that is make a decision that for the betterment of the situation that we're in for our country, he would purposely do something that wasn't necessarily beneficial to him personally. But anyway, I'd be remiss if I didn't thank him. But since I am asking tough questions, I do want to ask you another tough question. See if you know this one. Do you know what the Ponte del Suspiro is?
I do not.
Okay. You might know it in English. It's called the Bridge of Sighs. Are you familiar with the Bridge of Sighs?
Rings a bell. I can't.
Okay.
I know
In
a
Venice,
bridge with size.
who was the leader of Venice, had a palace. And across
All right, we might get a move in
palace,
crypto here.
he had his prison. And
This retracement on
At the
Bitcoin.
macro note, Trump has said he and Putin
palace and interrogated
have agreed to start negotiations immediately.
and then be tortured, and then after he confessed to something he normally didn't do, he would have to walk over the bridge and then into the dungeon and oftentimes die there. However, before he completed the task of crossing the bridge, there are two windows there, and he would stop at the windows and he'd look out over the magnificent city of Venice, and it's the last time oftentimes that person would get to see Venice. And so he'd sigh, and that's why it's called the Bridge of Sighs, the Ponte del Suspiro.
All right, I'm going to go
Reason I bring
long
that up is I
Ethan
think a lot of
XRP
Americans
with
feel
that
way right now,
Bitcoin move.
that they're crossing this bridge, and maybe it's
If
the last
it
time
doesn't
they've
hold the
seen
level, then I'll get out.
beautiful
But
America that we've had.
it's a pretty
And
big
they're worried.
intraday
They're
retracement.
worried
This
about
is just
the
an intraday
usurpation
scalp. I don't like anything on the
of
daily
powers.
charts on these yet.
They're worried about the balance of powers. Now, I was very proud of you.
Bitcoin would have to get over
said,
98,500
I can't
for
be
me to get
fired.
super bullish.
The
But
president can't fire me. I'm staying. Can anyone up here fire you?
yeah, ETH is moving to yeah.
Any one up
Yeah.
there? No single person can.
No single person can, right? I hope you continue with that independence, because I think at this moment is very important. Someone mentioned it earlier, and I think it is very, very important. So, with that out of the way, I did want to talk about the dual mandate, especially the employment issue. For a lot of people in America, their job really is the most important thing for them. Not even their investment, their job. And that's why employment is such an important position, I think, and it's so important to be part of the dual mandate. Are you looking at changing in any way the dual mandate?
So we don't have that authority. That's
Who has the authority to do that?
Congress.
Only Congress?
Yes. Well, Congress would have to pass a bill, which would be signed by the president.
Say that again, sorry?
Congress would need to pass a bill to change the dual mandate that the president signs.
That's right. And so I hope that you maintain your independence and at the same time follow the law, that there's a dual mandate. And that's, I think, very, very
Coin's starting
important
to
to most
juice.
Americans. And with that, again, I thank you for your service. I thank Michael Barr for service. I know he's going to continue to serve. I know he'll serve honorably like he always has. And with that, Mr. Chairman, I yield back.
The gentleman yields back. We recognize the gentleman from Middle Tennessee, Mr. Rose, for 5 minutes.
Thank you, Chairman Hill and Ranking Member Waters, for holding the hearing today, and thank you, Chair Powell. Always good to see you here with us. Chair Powell, you may recall the last time we spoke, I brought up the issue of credit risk transfers, CRTs, and urged you to allocate more resources to ensure that that framework applicants were receiving decisions from the Federal Reserve. I've recently heard back from stakeholders that they are receiving decisions from the Federal Reserve regarding CRT applications. I hope that the Federal Reserve team continues to
Did you hit that,
focus on
Yorkshire?
cutting down the backlog so that financial institutions can take risk off their balance sheets. Thank you for that. However, I still have concerns that we are not fully optimizing the use of CRTs In the case of mortgage risk, CRTs have successfully shifted risk from taxpayers to private capital, including capital markets and global
Let's go, Mughal.
insurers, while government-sponsored entities have clear
Thank you,
regulatory
Mughal.
treatment under the Federal Housing Finance Agency. Financial institutions lack
Anyone have a
similar
link for that
clarity, particularly under
Palantir?
Basel III. I understand that the Federal Reserve has begun to
AMA?
provide guidance, but more is needed to ensure that financial institutions can effectively manage risk, stay competitive globally, and serve their customers. Chair Powell, do you believe that there should be greater alignment in CRT treatment between banks and GSEs?
That's a great question. I will take your feedback back. Honestly, I don't know the answer to that.
And I just wonder what steps is or could the Federal Reserve take to clarify and harmonize capital rules to promote financial stability and competitiveness in this space?
Again, I'll take back your feedback, and that is our objective: is to be timely and thoughtful in that work.
Thank you. I appreciate that. In April 2024, Synapse Financial Technologies, a fintech company that provided banking-as-a-service solutions, filed for Chapter 11 bankruptcy. This event significantly impacted its partnerships with various fintech firms and banks, including Evolve Bank and Trust.
Well, I wanted 59,
To this
not
day,
60.
I have constituents in Tennessee's 6th District who are not able to access thousands of dollars of their funds, and there has been no communication regarding the timeline for resolution. Chair Powell, since the Federal Reserve Board is a supervisor of the Evolve Bank and Trust, could you provide any updates on what you are doing to ensure that my constituents receive their funds and the expected timeline for them to receive their funds?
So as their supervisor, as you point out, we've been pressing that bank to get money back to their customers, and we're actively engaged with the bank as they take steps to do so and return that money.
Breaks, too.
We're deeply concerned about the complaints that we've heard and aware of concerns raised during the bankruptcy proceedings. And to the extent there are violations of law, we'll follow up on that.
Thank you again. And are there any specific steps that my constituents could take to expedite the process or ensure that they receive their rightful balances?
I'll have to come back to you on that. There may be. I don't have anything for you, though, on that today.
Thank you. Chair Powell, is there anything else that the Federal Reserve Board is considering to
At 64
prevent
came around. There it
situations
goes.
such as this on a going forward
65.
basis?
Okay.
Well, I think when we see things, it's a lot of pattern recognition, so we'll be looking to avoid things like this happening in the future.
What did you say, Cheese?
Thank you. I think there has been a lack of appreciation for the work that President Trump has done to restore the American workforce. It is his example of calling
CF
federal
roll.
employees back to the office that we are now seeing corporate America follow as well. Chair Powell, as the federal government and companies move to end work-from-home policies and bring employees back to the office, how do you anticipate this shift will impact key economic indicators such as productivity, urban commercial real estate markets, and consumer spending patterns?
That's a really good question. I'm not sure of the answer. I've always felt that I am personally more productive in the office, and that's where I work.
Yeah, he's about to go
Except on
high.
weekends when I work at home.
Just following Bitcoin right now, which
But,
is
in terms
great.
of productivity, I think
Bitcoin's
there
cruising.
are different views. I know a lot of CEOs feel strongly that people are more productive in the office, and we'll just have to see. I also think, though, that
Some levels
on
above.
the other side,
It could get
work
wild.
from
We'll
home
see.
did allow very high levels of labor force participation among, for example, women. We had all-time record high participation by women. So I think
What was
there
the
are
investment that
benefits from
ABBV
work from home. I
took?
hope we continue to
What
realize
price? 10 million at $2.30 a share.
Gentleman from Illinois, the ranking member.
Upfront payment,
on our
$42
Financial
million in
Institutions
cash.
Subcommittee, Mr. Bill Foster, 5 minutes.
Hi. Thank you,
Wow.
and thank you for everything you do. I'd just like to get some sort of level setting.
Receive
on
up
what
to
you've been
2.1
facing
billion
recently.
additional
It's my
payments, including a
understanding that your
305 million in
Inspector
program
General of the
num
Federal Reserve has not yet
fees,
been fired.
preclinical
Is that
development
correct?
option extension fees.
That is correct.
Okay.
Development.
And,
Damn.
And you've not also had
Well, I mean, it's gotta meet the
high-level
milestones, but
resignations of senior personnel.
they hit
that
it.
you've had in Treasury.
Tesla high a day.
So
No, nothing like that.
As of yet, no. And so no examples of, junior personnel being given administrative access to the systems, your technical systems?
Are you talking now about the payment systems that
No,
we?
payment systems or other technical systems?
No.
Email systems?
No.
Anything like that?
None of that.
Okay, all right. So far, you've not suffered through what Treasury?
The ticker LNG, Lima November Golf shares are selling off.
From
New
other
lows,
central
LNG.
bankers or commercial bankers from around the world about, what can we, uncertainty about whether the Federal Reserve will be able to continue doing its job if you suffered the same sort of intrusion that Treasury did?
I haven't, no.
So you haven't, they haven't called you up and said, what the heck is going on? Do we have to defend ourselves against, unknown software being installed on the system? So
I haven't had any such calls.
okay, all right. Let's see. We've also seen calls to resumption of calls to audit the Fed. All right, which is, as you can remember from that gentleman up on the wall there, this was a big theme of, and first off, the Fed does get audited, correct?
We are audited in the sense that everyone understands that word to mean, which is we have a Big Four accounting firm who looks at our books and gives us an opinion, does an audit, and publishes an opinion. That's all public.
Right, and it's my recollection there have never been any big problems uncovered in
No,
this.
we actually have quite a simple business model, although we have a large balance sheet. We're like a big
KDLY
community
curl
bank,
back
only
up.
with no credit risk and very simple.
So in the ordinary sense, talk of auditing the Fed
Fully
makes
audited.
no sense. It makes no sense. But what was really meant, certainly during the time when we were talking a decade ago, I guess, it was really all about micromanaging Fed monetary policy, that they said we want to audit the monetary policy, which doesn't really make sense since it's a policy thing. Do you have any indication of whether the resumption of calls to audit the Fed will be, audits or some new effort to politically micromanage the monetary policy?
I have no way of knowing. Really what it is the GAO is free to work on every area of the Fed except monetary policy and does so. We have GAO reports, all over the place over many years, but they don't audit monetary policy. And, what the threat would be if that were to go away, you'd have investigations into decisions on monetary policy, and, that would be a different thing. I think it was designed by its designer to be a step on the way to eliminating the Fed.
That is correct. Yeah, the calls to end the Fed came from the same wing of the Republican Party and I guess still exists. I think we're up to something like 20 Republican sponsors of the end of the Fed bill. Let's see, I was sort of surprised to see that the word tariff only occurred twice in your monetary policy report, whereas if you look at financial trade journals, it's mentioned 5 times above the fold for those that read hard copies. So, this must be a very hard thing for you to deal with because, as you're aware, Trump's tariffs and other trade policies put us in a manufacturing recession a year before COVID hit. And so this is not a small thing if these resume. But you have to sort of filter out the chaotic noise and the guidance that varies hour by hour or week by week. So how do you actually filter that? You say correctly that, well, let's wait to see what the actual policies are. But then that depends. If you listen, one day you get these are the actual policies. At some point you have to feed these into your macro models of what happens. And how do you do that filtering when there's just so much random noise on the signal?
Well, I think it's straightforward now in the sense that no one knows pretty much what the exact policies will be. That's still evolving, and so you can't really take action. You can do analysis of various hypothetical things, and we've been doing a lot of that. But ultimately, it matters what happens. What's tariffed, for how long? Are there substitutes? There are many questions that will have to be answered, and even then, the question will be how much of that will transfer to the consumer. As you know, that can fall on the exporter, the importer, or the retailer, or the consumer.
Or in my case, manufacturers are on both ends of this.
Yeah. So we really just don't.
So if that sort of analysis,
Gentleman's time has expired.
Congress, it would be great. So thank you.
The gentleman from South Carolina, Mr. Norman's recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Powell. I appreciate you coming and addressing our body. In 2011, Vice Chairman Yellen made a statement about the concern about the long-term debt situation and the imbalance that we have with our budget. In the fourth quarter, when she made the statement, the federal debt held by the public was, as a percentage of GDP, was 64.75%. Now, the same debt to GDP as identified by CBO was 99% at the end of 24. Do you express the same concern that Ms. Yellen had about the severity of where we are with our continued long-term imbalance?
I have done so on many occasions. And essentially that the U.S. we're on an unsustainable path. And the debt level isn't unsustainable, but the path is sustainable, and certainly it's past time for Congress to work on that. But that's what I can say. I can't say more than that.
What do you think the benchmark would be? We're in the middle of the budget situation now, trying to debate, particularly with reconciliation. What would you say is a benchmark that would ease? What level of cuts, in your opinion, would ease your concern over what we're doing? We're $37 trillion now, but when you add the mandatory spending we have on Social Security, as examples, going bankrupt in 35. Highway trust fund.
Wow, look at
running an imbalance. What level do you think will give you, I guess, some assurance that we're going to get our house in order?
So I don't have a specific number; it wouldn't be appropriate. But I will say this: in having looked at this, you know, the successful programs to get back on the right track, they tend to make progress over a long period of time. And in other words, you've got to get to a place where the economy is growing faster than the debt, and then you need to stay on that path for 20 years. This is not the kind of thing where we can fix it.
Damn.
We just need to be making progress. And, you know, right now, we're running very large deficits at a time of full employment. So we need to start moving. You're either making progress or you're not. Right now, we're not. So the key thing is to just, you know, is for it to become a big issue, and then people work together. The things that need to be done are things that can only be done on a bipartisan basis. Only. These are the things that need to be dealt with, cannot be dealt with by one political party. I'll leave you with that.
It's going to be a tall order.
It is.
To get
The order
bipartisan.
only grows. It gets taller every year.
Yeah, it does. That's one of our issues we're having now.
This is the first 5-minute cock on AIFF. I'm going to take a little pop shot at it, see if it can curl.
Confidence with the Dose Commission, which is giving Americans hope that we're seeing things that are being spent of the taxpayers' dollars that we never imagined that we couldn't get to. Now he's exposing that. What level of growth do you think, with the confidence growing under Trump, that we will be able to reach this year and the years after? Because the 20 years you're talking about, we've got to have a pretty solid, it can't be, it's got to be, would you say 1.8, 2% growth of GDP?
You know,
B?
For a long time, people thought that U.S. potential growth was a little bit below 2%. I think we've had we've had 5 years of good productivity growth, and we hope that'll continue. If that does continue, then it might be 2 or 2.25. If you're just talking about long-term budget assumptions, though, I'd be conservative and say 2%.
You think that's doable?
2%, yeah.
First candle or candle in 5, absolutely.
Stress tests.
Pop and dropped on me.
Banks run, and that public has been given information on everything but how that stress test relates to them. Why is it not further? Why is it? Most people don't understand what it is. Why is it not broadcast more, in your opinion?
Why the stress tests?
Correct.
So the theory from the beginning was to not to disclose the whole models and the way that they worked, because in a way that felt like giving the test in advance. This was a brand new initiative that started coming out of the global financial crisis, very successful generally, but over time, the argument for not giving away the models, giving the models out, has, I think, weakened.
Oh, wow.
And also the law has moved. The Supreme Court has has moved to
Ticker HIMS, HIMS. Here's our senior spike in new highs. Hotel India, Michael Sandy.
Obligations to be transparent under the Administrative Procedure Act. And so it's time we
Gentleman's
think for us
time
to
has
disclose
expired.
the models.
Thank you so much.
Thank you.
Of course this fails.
Thank you, gentleman. Gentleman yields back. The gentlewoman from Texas, Ms. Gonzalez, is recognized.
Just did a
for
cock fail.
Thank you, Mr. Chairman. And thank you, Chairman Powell, for joining us this morning. As you know, the United Kingdom, European Union, Mexico, Brazil, India, and Japan all allow non-bank payment service providers access to their instant payment services. This allows improved access to liquidity for users, and they can send and receive payments instantly without waiting.
And no cut. Another pop and drop on me. All over me face.
Multiple days. Does the Federal Reserve plan to allow non-bank payment service providers access to
Iran?
payment rail?
No, I've never actually played them as a Bitcoin play.
Plan that right now. What we really want to do is to have the consumer.
The ERs on the
care.
Bitcoin
The
plays
consumer
haven't
can
really
have
played
access.
out well.
Our payment rails go through the banks, and so you have to go through.
Ticker GM, Golf, Michael. Shares also seen a spike in activity, new highs for GM.
Not that I'm aware of.
What getting on the consumer price index? What
Well,
consumer
House
price
Speaker
index
Johnson
reading
says he
would cause
believes the
you
White
to
House
cut
is considering
rates?
exemptions to
2%
reciprocal tariffs,
exactly,
including autos
or
and
is it a trend
pharmaceuticals.
closer to 2%? How much more movement downward do you need to see in CPI
That'd be
for
big.
the Fed to start looking in?
As it dumps on my
rate
face.
So remember, we're looking at two things. We're looking at the labor market and
filled at
inflation.
47.
And so headline inflation last year was 2.6%. And we've said, assuming the labor market remains solid and strong, we want to see further progress. We didn't actually make much progress on core PCE inflation.
And we're about
last
to go
year
rounding.
for reasons that I can explain, but nonetheless, the progress wasn't there. So we want to see a resumption of progress. I'm not going to put a really specific number on it. I mean, the truth is the economy is strong, the labor market's solid, and we have the luxury of being able to wait.
I can't watch it. I can't watch.
Let our
I can't
restrictive
watch.
policy work to get inflation coming down again, and that's what we're doing.
Is there any concern at the Fed that deporting millions of undocumented workers that do a lot of crucial work in the agriculture industry, in construction, in the hospitality business will create upwardly pressure on inflation in this country?
So we don't, we don't have concerns about policies. We just look at the data, and labor supply has actually, the new labor supply from immigration has actually come down quite sharply over the second half of last year, and there's every reason to
Pop
think that
10
will
cents
continue.
and then down.
Demand has also come down, so that
What are we
the
doing here?
unemployment rate has actually been flat since July. We're going to look at
But wouldn't
supply and
taking a
demand.
million workers out of the economy
Another
have
cuck.
direct
Why
impact
not?
on
It could. We'll just have to see how supply and demand match up. In any case,
Why not?
we're not here to comment on immigration. We're here to achieve.
Retrace the
Right.
whole
No,
thing. Why
I
not?
totally get that. I'm just figuring if you take 1 million people out of the workforce, how do we make that up, and how would that have an upwardly inflationary pressure on our economy? But moving on, recently the Cleveland Fed's new tenant rent index tumbled to a negative 2.4 year-over-year rate. Does that type of deflation in shelter make you more positive on future interest rate cuts?
So, yes, but the thing is, what we're really looking at is, in the aggregate, housing services inflation.
BBAI
And so I believe
just
that's
will
a measure
not
of
give it up.
Current rents, so market rents that are happening, and market rents have not been showing much inflation for a long time. But market rents don't make their way into rents until leases turn over, existing leases turn over, and that's been the slow part of the process. We have seen a lot of progress on that, but we're not there yet. We're not back to levels of housing services inflation, which is what I described, but we're getting there. We're making clear progress.
You recently said that employment prospects are solid, and construction employment, which represents 6.1% of all private employment, is falling significantly. Does this concern you?
So we look at the aggregate numbers. There are always industries that are growing and not growing. I think the last few job reports have been significant job creation. You saw the one here a week or so ago, which revised up the last 2 months and strong job creation. In fact, it looks like
rate this
job
906.
creation may actually have picked up a little bit around the end of the year last
Thank you.
couple
And just
months.
very briefly, given what we had had a business capex recession the last time the economy faced uncertainty with large tariffs, are you monitoring capex developments closer this time around?
We're monitoring them carefully, yes.
Thank you. I yield back.
Gentleman yields back.
And gonna pull back now.
Thank you, Mr. Chairman, and thank you very much, Chairman Powell. Good to see you. I did recently chair an oversight subcommittee hearing on debanking. During our hearing, we revealed evidence that the FDIC directly pressured banks to debank crypto. What do you think of that situation?
So it's, I think we're all struck at the number of complaints and the breadth of them. And, you know, want to understand, we want to take a fresh look at this area. It's not something, we're not telling banks that they can't bank certain people from certain institutions, anything like that. Nonetheless, we're hearing these
Top
things.
tick Tommy.
Take at least some of it is real. So we need to understand it and stop it from happening because, and you know, if you look at what the banks are saying,
Everybody wants that
a lot of
920.
this is that the enforcement of anti-money laundering is so tough that at any sign, any flag at all that gets raised, they just cut people off, and they can't explain. So that may be part of it, but I think we need to do some work, get to the bottom of it, and address this.
18.
Chairman, there were hundreds of letters, by the way, that were pretty clear that banks should avoid doing business with crypto companies. No such pause letters, as they're referred to, or communications of this coming from the Fed?
Not that I'm aware of. No, it's not been our policy. Our banks are doing business with crypto companies.
See what it does here on a break.
Inside the bank, some of them are. We've been a little bit careful.
18 tap again.
I really don't think we've been telling people they can't do it.
I think a lot of people, including us, would appreciate you doing a careful review of that. The banking industry itself is concerned that there's no vice chair
Way too
supervision
much
to
resistance
provide,
here. This is kind of nuts.
clarity on multiple issues from Basel III to Reg II and debanking. Do you expect
Third
to have an
attempt
acting
at
vice chair
418.
supervision? When do you expect to have an acting vice chair?
We don't have. We need to have a confirmed vice chair if we're going to have a vice chair.
Okay.
There's no such thing as acting for us. But I don't know. That's up to the administration. I'll tell you what, the way we look at it is we're going to do our jobs, and I think there are a number of things that can be done that'll be very constructive. And if there is a new vice chair for supervision, I will welcome that person and do everything I can to make them successful.
Okay, thank you. Yesterday, you noted that Basel III Endgame could be finalized fairly quickly. Given last year's extensive public comments, will you ensure the rule does not restrict access to capital and fully incorporates industry feedback? And as you stated, you felt that the capital reserves for banks was about right.
18 again. Oh, Billy.
Too drastic there.
No, that's right. Yeah, that's correct.
Okay, great.
Watch the cock and drop that you
So
know
the
it can
CPI
do.
this morning came in a little hotter than expected at 3%. Did this surprise you?
It was, the CPI reading was above almost every forecast, but I would just offer a note of caution on this, 2 notes of caution. One is we don't get excited about 1 or 2 good readings, and we don't get excited about 1 or 2 bad readings. The second thing, though, is we target PCE inflation because we think it's simply a better measure of inflation. And so you need to know the translation from CPI to PCE, and we get more data on that. Tomorrow we'll get the producer price index. So I think it's always wise.
It
and
tapped
the
420
people who
and
follow us
stopped
closely
me
know
out.
this.
Okay.
We'll know actually what the PCE readings are, late tomorrow.
Okay. So in the past, as you well know, you called inflation transitory. Then the Fed signaled 3 rate cuts for 2024, and the market's priced in 6. Now that you're saying that there's no rush to cut rates, do you find this forward guidance stabilizing markets or fueling volatility?
So this is the summary of economic projections, the dot plot. And, I think markets like it. It's kind of the only, it is the forward guidance that we give. We don't really mean it as forward guidance, but markets do take it. Sometimes they take it too seriously. I think most market participants understand that it's highly conditional and dependent on what actually happens in the economy.
And that's the feedback that you do receive? That
Yes.
They find it
Yeah. And
helpful?
when we talk about getting rid of it, market participants will tell you, please don't do that.
Okay. if Doge found $1 trillion in wasteful, unnecessary spending, the Department of Government Efficiency, of course, and wouldn't that have a positive effect on inflation, allowing you to perhaps lower interest rates and, of course, reduce our deficit spending?
So this is if $1 trillion of spending were
Just
eliminated.
$1 trillion just showed up.
You'd have to run that through a model, but I mean, ultimately, it would, hard to say exactly how it would affect the economy.
You got a $6 billion budget at the Fed. Would you welcome Doge to?
Please check the number of shares. What are we talking about?
We haven't
Sell,
heard
you.
I got nothing for you on that today.
E-turd.
Thank you, Chairman. I yield back, Chairman.
Tell me I didn't have shares to sell.
Gentleman from Illinois, Mr. Casten, is recognized for 5 minutes.
Thank you, Mr. Chair. Chair Powell, always a pleasure to see you again. I want to start, and I don't expect you to comment on the policy here, but there's been a number of actions from the Trump administration of scrubbing or limiting data that the private sector has historically relied on to understand the direct and indirect impacts on the economy, public health data, information about breaking things down by gender, by race, that we need to understand granular shifts in the economy. I realize that you don't rely exclusively on government data, but has there been anything that has happened since the White House was sworn in that has limited the Fed's access to information you need to fulfill your dual mandate?
Not that I'm aware of, no.
If there was, will you commit to sharing it with Congress so that we can fulfill our oversight responsibilities?
Sure.
Okay.
Sure. I love his answers. Sure.
When you were here in July, I'd asked you this question. I just want to confirm that you still feel the same way. Is it still your view that the Federal Reserve that climate change constitutes an emerging threat to
Here's the
US
juice I was
financial
looking
stability?
for. Watch high day break again.
I wouldn't say that climate change is currently a threat to U.S. financial stability.
An emerging threat.
I would say that it may emerge over time as such.
Okay, so $250 billion of losses in California. We've now got multiple states where the insurer of last resort is insolvent, reporting today that California is having to bail it out. I know we have a difference of opinion on NGFS. I don't want to go into that, but is the Fed monitoring what is happening to our financial system as those insurers pull out, as insurance rates goes up and people's both access to property insurance and the cost of insurance are going up? Are you monitoring what's happening systemically in our economy as a result of that?
Yes. The question, though, if the question is it a threat to the financial stability of the United States? That's really the question. And of course, we're following that very, very carefully.
Okay, so if you're monitoring it, where is the risk that was being backed by the insurance industry moving? Where in the economy does that risk now live?
So insurance companies, as you know, can cancel policies and not issue them, and they can leave states, and they're doing a lot of that. So where do those risks fall? They fall on homeowners and other beneficiaries, and they fall on state governments and to some extent the federal government. But they don't cause large financial institutions to fail.
Are you seeing shifts in mortgagers, mortgage servicers, their willingness to provide loans to homes as those insurance rates go up?
UPSC is
Implicitly,
a monster
if you
right
can't get
now.
insurance, then there won't be a mortgage. So
Okay.
I can't point to episodes where that's happening, but that's certainly where this looks like it's headed.
Okay, because, I mean, there has been reports going back several years now that the more prone your property is to flood risk, to fire risk, the more likely you are as a bank to offload that onto Fannie and Freddie, right? We've seen that data happening. So that then raises the question of, and this is maybe just purely academic and wonky, if you own a set of cash flows and you want to sell them to me, and we both have full information, I'm only going to buy them from you at an accretive value to you to the extent that I have a lower cost of money than you do, right? Just, I mean, sort of like Econ 101, right? So
I'll tell you, I know from Reuters, a majority of U.S. Senate has voted to advance nomination of RFK Jr. for Health and Human Services Secretary.
Setting aside the nuances of how the CBO scores all these sorts of things, isn't the sale of Fannie and Freddie on the assumption that the buyer and seller have perfect information,
Of course it goes
on both
now.
sides of that transaction? If that's accretive to the American taxpayer, doesn't that implicitly assume that we have to sell to somebody with a lower cost of capital than we do?
Watch weed and mRNA. Yeah, it's just going forward, though.
An expectation to pass for
And
confirmation
that would only
on that
not
for
be
RFK
true
Jr.
to the extent, I suppose, either that buyer
Gosh,
violates
this
every rule I
fucking
had in my
stock,
M&A
dude.
career of paying for upside, as they say, or
RFK
that
Jr.
the
has
buyer
reached the
lacked
51
information
vote
that the
threshold.
seller had.
Oh, RFK, they are voting?
Fair.
Okay. So what I'd like to understand from you is, does that create a conflict of interest for the United States government? Because if we have if we have information about climate change being scrubbed from our data sets, and we have a White House that would like to sell Fannie and Freddie,
They voted for
are we
Tulsi and
committed to
RFK
efficient
today.
markets that depend on accurate, transparent information, or are we committed to making a quick buck? In which case, we might want to have
Bitcoin's still juicing here. Okay, that's
Is
my
the Fed
bullish level
committed
on
to
Bitcoin.
transparent markets, I guess, is the first question, and then the second one: do you feel that conflict?
I think we're getting a little away from our mandate at the Fed. I mean, the idea of privatization is to get this off the balance sheet of the Fed and get private capital backing it up. And
Sure, and there would be good reasons for that. But if that is coming at the expense of value to the American taxpayer, we need to be transparent about that.
Right, but we have private sector banks. You know, we could make all credit could be made cheaper if offered by the central
yield back
government, right?
Gentleman yields back. The gentleman from South Carolina, Mr.
That's
Timmons,
TX.
is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to Chair Powell for joining us today.
Why this one?
Yesterday, in an exchange with Senator Warren on stress testing, you said that the Fed is having to change their approach, quote, because the ground has shifted very substantially in administrative law, end quote. And while, yes, the ground has certainly shifted since last year, I'm slightly confused because after reading up on the banking industry's lawsuit against the Fed, I do not see a direct connection between their case and the loss of Chevron deference. Their case seems to center on the Fed not complying with the long-established process laid out by the Administrative Procedures Act, and while some at the Fed may not classify stress tests as a rulemaking, when they require banks to alter their capital levels, they have the effect of rulemaking. So, Chair Powell, I'm hoping you can clear this up for me. Is this a matter of adapting to a post-Chevron world, or was this the Fed unlawfully using stress tests as a backdoor to increase capital requirements on banks?
Okay, we're close to the levels where I get bullish on Bitcoin. I just pulled it up. We're right there. We're right there.
The next sentence I say would be evidence in the court case that we're having.
So if this is
I'm not gonna
truly
get into,
falling
debating what
wedge,
the law is,
I don't know
because
how I
we're in
drew
litigation.
these
I will
levels.
say it's not
Kind of
just,
considered these as
Chevron, though.
oddballs.
I think it's clear from other cases
One,
that expectations under the
two.
Administrative Procedure Act are also raised, just generally speaking. And so we felt that, like, overall, that really has
1K
changed the
tax for
playing field.
EVs.
Any changes in capital requirements is very disruptive.
Republicans are proposing a $1,000 tax on new electric vehicle purchases.
Long-term stability of the U.S. economy.
For road.
On to the next question. So foreign banks, many of which are smaller than their domestic counterparts, play a larger role in providing financing in the Treasury market. U.S. banks, on the other hand, are less involved than they could be, primarily because regulators have made this activity less profitable for them. Stricter capital requirements, liquidity buffers, and compliance costs stemming from regulations like Dodd-Frank.
That shows Arabian seeing a bump in activity, RIVN.
Operations, particularly in repo and securities lending. As a result, foreign banks facing fewer regulatory hurdles have stepped in to take on this crucial role, providing the liquidity and financing needed. This shift has significantly altered the market landscape, with foreign institutions now holding a larger share of financing operations that were once dominated by U.S. banks. So my question is this: why are we setting up a system where the U.S. Treasury market needs to rely on so much on foreign banks for proper functioning, and do you see that as a national security threat?
I see the trend that I see is that we have very significantly raised the capital costs of supporting market activity, and especially for low-risk activities that are low-risk, low-return. What's happened is the amount of treasuries has grown much greater than it is now much greater than the capital that's allocated to intermediate. So that's why you see the intermediation and relative lack of liquidity.
Okay, BBAI, I want to stop being an ass.
And that's something that we'll be looking at, is to reduce the.
That was a 15-minute cock I played. Nothing. Now 15-minute cock. Okay.
To account for that. This is something that we proposed before, which I think is intended to increase liquidity in the capital markets for banks subject to it.
Thank you for that. I want to end on a positive note. I want to discuss the optimism among the American public. Small business optimism experienced its largest increase in 40 years following President Trump's recent election, with continued positive momentum in the months since. This surge reflects growing confidence in the economy, spurred by expectations of favorable policies and reduced regulatory burdens for small businesses. The index is not only well above its 50-year average, but also reached its highest point in December since late 2018. This shift has caught the attention of many across the economic landscape. Back home in South Carolina, I frequently speak with small business owners who are enthusiastic about the future and eager to help their businesses thrive under the new administration. So my question is this: how do you see this significant jump in optimism
ADLY.
translating
Now
into
it starts to
tangible
move
outcomes
properly
in
on a
terms of
1 minute.
investment, hiring,
Of
and
course.
overall growth for small businesses?
So we know that sentiment really matters. It's really hard to model it, but you do think about it when you're thinking about your forecast. You think about, optimism and that kind of thing, because that's what supports investment. All the investments that companies make, they have to have on some level optimism that it's worth shelling out this money to do what it is they're doing. So it's a key part of how economies work.
I took her LTRY Lima Tango Romeo Yankee note AK filing out. Says on February 6th, Larry commented in a 2-year sponsorship agreement with SoccerX.
Best thing we can do.
Oh, this is the
keep
AK.
price stability.
This is yesterday's
Also
news.
full employment, maximum employment, and then create a stable environment where businesses and households can not worry about it.
This is yesterday's news in the AK.
Sustainable growth.
And as one of the millions of Americans about to get a mortgage, interest rates going down would be helpful. Thank you, Mr. Chair. I yield back.
Gentleman yields back. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Chairman Powell, we're at an inflection point, and we need leaders who are courageous enough to speak truth and who are committed to helping every person who calls this country home. There are many who wrongfully justify Trump's presidency and the lawless work of DOJ as good for the economy. Well, Chairman Powell, you actually know something about the economy. The Federal Reserve has a dual mandate, maximizing employment and stabilizing prices. And it is clear to me that Donald Trump and Elon Musk's actions are impeding.
That's an AK filing. Says in consideration, SoccerX will receive 150,000 restricted shares of lottery.com, value at $2 per share.
The Boston Federal Reserve put out a report last week which estimated tariffs would be inflationary and raise prices. Chair, I ask unanimous consent to enter into the record the report titled "The Impact of Tariffs on Inflation." Additionally, Donald Trump has threatened mass deportations. He seeks to terrorize immigrant communities and separate families, claiming it will help the economy. I don't think so. And neither does the Peterson Institute for International Economics, who estimated that employment would drop 7%. Chair, I ask unanimous consent to enter into the record the report titled "Mass Deportations Would Harm the U.S. Economy."
Without objection.
Now, Chairman Powell, I want the Federal Reserve to be successful. So if Elon Musk and his Doge bros were to walk into the Federal Reserve, intimidate staff, access classified data, and take control of the agency, the same way they did USAID and the Consumer Financial Protection Bureau, would that help or hurt our economy?
We don't have that happening. I'm not going to speculate.
Well, on your own website, it says, quote, "The Federal Reserve is accountable to the public and the U.S. Congress," unquote. So I would like to see a clear answer on this. Your staff are watching, Wall Street is watching, Donald and Elon are certainly watching, and we all want to know, what is your view if DOGE does to the Federal Reserve what it has already done to other independent agencies?
What we're going to do at the Fed is keep our heads down and keep working, wait to see what new policies emerge, and try to make a thoughtful, sensible set of policies on our part once we understand the implications of those.
It's a dip and rip on Okalo. You gonna do it?
Elon Musk or anyone from DOGE attempts to access the Federal Reserve's private data, will you immediately alert the members of this committee?
Sure.
Thank you. This is to me as night and day. Donald Trump and Elon Musk are not trying to help working class people.
The headline on LTRY was the news out
They want
yesterday.
The
It was just a
tool
form
that helps the rich get richer,
filing on it.
banks get bigger, and regulations disappear altogether. But that is not your mandate. The Fed must maintain its independence and integrity. Put the interests of the public before Elon Musk. The world's richest man does not care about the price of eggs. He doesn't have to when he has already bought the presidency. I yield back.
The gentlewoman yields back. The gentlewoman from California, Ms. Kemp.
Thank you, Chairman Hill. And Chairman Powell, thank you for joining us today.
Holy
and
shit.
I want to commend you again for ignoring the outside noise
Did you see
and
that
staying
volume?
true to Fed's dual mandate. Chairman Powell, it seems the advent of artificial intelligence and other emerging technologies has helped the United States increase productivity when compared to other countries around the world. That makes our country more competitive and envy of economic growth. So do you believe that this boom in productivity is sustainable in the long term? And if so, how does that increase in productivity affect your models to forecast inflation, therefore monetary policy?
We have had a boom in productivity. It is most welcome. And of course, it would be great if it were sustained. I think if you look at the candidates that try to explain it, some of them are kind of one-time things, and some of them could be more sustained. You mentioned technology and AI. To the extent that's part of it, that could be a sustainable increase in the rate of growth and productivity. To the extent it was more about job reallocation, people switching jobs coming out of the pandemic, that's kind of a one-time thing. Also, we had a wave of startups, a wave of early stage companies, startups. That also tends to be linked to productivity. That too could just be a one-time increase in productivity. Literally, no one has the record of being able to successfully forecast productivity for very long. But again, it's going to depend on many things, and it's as long as we have this increased productivity, it's most welcome and important.
Thank you. Over the past decade, we've seen Fed intervene with more regular frequency to maintain the orderly functioning of the U.S. Treasury market much more than decades before. It seemed like the private sector was able to manage this without too much Fed intervention pre-financial crisis, and a long-standing and growing bipartisan consensus that the SLR and other regulations may be causing this. If so, what do you think the solution is to reduce the need for frequent Fed intervention?
So I do think we need to work on Treasury market structure, and part of that answer can be, and I think will be, reducing the calibration of the supplemental leverage ratio, as you mentioned. That's something that I have long supported, and for the reason that, the quantity of treasuries has grown really significantly, and the capital allocated to intermediating trades in treasuries has not, in fact, has shrunk. So we need a liquid treasury market, and this is one of the things that we.
Ticker tail rate TLRY shares are seeing an increase of activity, new highs. This comes after RFK Jr.
I want to go back to March
confirmation on that.
2023 in response to the fallout of Silicon Valley Bank. It is my understanding that the Fed is analyzing ways to create a more efficient process for
Price
financial
compression here. I'm looking
institutions
for expansion
to
out of this range.
access the discount window. One issue that has come up is that it can take extended periods of time to assess and
It's not
determine
really cranking
the
right now.
lendable value of collateral, potentially denying the institution's ability to access liquidity quickly. Is the Fed looking at ways to streamline the process to assess and determine the value of collateral at discount window?
We are looking at, so there are sort of impediments to the efficiency of the discount window. And those are things we can work on, and we're working hard on. There's also the question of stigma, though, that banks are reluctant to use it because of the so-called stigma of using it. And that is a very hard problem to solve. We're also working on that one.
Regarding the fast review of the discount window operations, can you give us an update on what problems the Fed was able to identify, what solutions you're pursuing, and what the estimated timeline is for any action?
So the study is ongoing right now. The work's ongoing, but essentially,
okay.
You touched on some of this. It's
no Momo in
inefficient,
it.
it's slow,
QMCO's juicing. What's that all about? It's a 30-cent pop.
We need to have collateral processes that are very quick and very efficient because they need to be quick and efficient in a crisis. So that's part of it. Just general modernization, investing in technology, modernizing the discount window. That's part of it. The harder part is really turning it into something that banks are comfortable using because
That
they feel
absolutely
it's
should
not
have.
stigmatized. And we're working on that too.
The opening the discount window 24/7 could really help the banks in California, especially the state that I represent, the Southern California that I represent. Thank you.
Thank you.
Gentlewoman yields back. The gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you, Mr. Chair. President Donald Trump has been asserting among the most aggressive and expansive claims of presidential power that we've seen in our nation's history. He's taken the unitary executive theory to new extremes. He's claiming to have the authority to defund whatever agency he wishes, to abolish whatever agency he wishes, and to fire whomever he wishes, even if it means violating an act of Congress. Mr. Chairman, suppose for a moment the president were to ignore the congressional statute that establishes the independence of the Federal Reserve. What economic consequences would result from the Fed losing its independence?
I think research over many, many years in many, many jurisdictions shows that some degree of independence is very important in keeping inflation under control. And the connection is obvious. If politicians are going to want to be reelected and things like that, they're not going to be focused on the longer term. We have the mandate to remain separate from all of that, to stay out of all of that, so that we can just focus on, not on election cycles or helping or hurting any political party or politician.
Wow, this is a really boring
just on
trade.
Serving the public as a whole.
CSAI high
That is
today?
essential, and it's
Now you're
it's
talking
uniform, I
something
think,
that's going
across
to get me
all
excited.
Advanced economy central banks.
Much like the Bureau of Fiscal Service, the Federal Reserve has highly sensitive payment systems. President Trump and Secretary Bessent granted Elon Musk and his team of outsiders access to the central payment system of the federal government, a system that is often described as America's checkbook. Would you, as the Federal Reserve Chair, ever grant a team of outsiders access
If
to
this
the
doesn't
Fed's
break
central
down, you
payment
could break
system
through this
without
diagonal in a
sufficient
big way
vetting
here.
and sufficient security clearance?
Well, no, but let's remember, we're the Treasury's fiscal agent. Everything we do is under their direction, and there are Treasury
KDLY, another juicer over
the
5.
actual
Jeez.
payment to the recipients, and so we control access to that very, very carefully.
The Treasury issues the payments and then you process them.
They order us to pay
CSAI to
someone,
15?
we just pay. We don't have any.
Jeez.
We don't question payments. We just make the payments, and we control access to those systems very carefully.
And what would be the danger of lightly granting access to the Fed's payment system to outsiders without sufficient vetting? Like, what could go wrong?
Well, the reason why we're so careful about it is just, for one thing, the possibility of mistakes and someone coming in and changing the code and things like that. So we have very careful access. Another one is just you open it up to more cyber risk and things like that. So I think all really important computer programming is subject to very, very careful access restrictions, and we're no exception.
Right. So you believe, as I do, that granting an insufficiently vetted team of outsiders
Something gets some
access to the payment
momentum.
systems of the Treasury or the Fed would radically raise the risk of a cyber breach at the hands of foreign adversaries like China and Russia.
So we're talking hypothetically. I can tell you that is not something that's happened relative to. We can speak to the systems that the Treasury has asked us to operate on their behalf, and that is not happened in those systems.
I represent one of the poorest congressional districts in America. I have cash-strapped constituents who pay exorbitant fees simply to transfer their own money, often to loved ones abroad. Access to FedWire could play a role in radically reducing the cost of remittances and payments for the lowest income Americans. What is your position on expanding FedWire access for the purpose of reducing the cost of remittances and payments?
So we do, FedWire is really between banks. These are very large wholesale transactions. It's one of the world's most important, if not the most important, financial market utility. I don't think we're looking to open it up to retail customers. I think, faster retail payments and particularly cross-border payments are a subject of a lot of work in the international sphere, and I think we all understand it's important to lower the costs and the risks of those.
The commercial real estate, do you feel that continues to be a ticking time bomb within the financial system? What's your sense of?
I wouldn't say that. So we've been saying, and I think it's still true, that this is a problem that's been with us and it's going to be with us for a while. If I can say something modestly constructive, it doesn't seem to be getting worse.
KLO going over
So
55
we have
now.
a lot of
Wow.
embedded losses, and they're just going to need to be realized. So we're working with financial institutions to make sure they have a plan and understand their losses and can manage them.
I see my time has expired. Thank you.
UPST
Gentleman
5
yields back.
minute.
The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, it's good seeing you again. I want to start with just a broad-based
Market's a
conversation.
nice little
I know the Fed
poppy.
has been making adjustments to the Fed funds rate over the last several months, and what we've noticed is there's not been a lot of, although there's been movement on short-term rates, there really has been minimal impact on, in my view, intermediate to long-term rates. Can you expound on
Yeah,
why,
let's see.
why you
I'll
think
let it feel like
phenomena
Charlie stop
so
loss before
exists
it'll get filled no matter
with
what
respect to
happens.
Fed rate
Oh, do
monetary
I just keep it
policy
activated or cry?
versus general borrowing rates
4% stop.
for businesses and
You mean
consumers?
profit stop?
Right. So
What are you
you're
short?
right, of
Are you
course.
short on
We've
it?
lowered the federal funds rate, and as sometimes happens, longer rates have gone up. They've gone up and come down and gone.
Like
back
if you
up,
have a
they move
trailing
around.
stop of
They're
4%.
higher. And the reason is that we don't
yeah,
control
you're probably gonna
long-term
get filled
rates. They
pretty
react
much,
to a whole
pretty
bunch
big.
of different things, including a sense
quickly.
of more deficit spending coming, including
Yeah, KDLY. I'm looking for an entry on it.
of risk.
I don't like the movements.
So markets aren't pricing in higher inflation, but maybe pricing in a little, that the risk of that is there. And that could be a reaction to new policies or not. But ultimately, though, the increase in longer-term rates is really mostly not about
Say 920 break
policy
might give us another
or our
pop.
job of maintaining price stability. It's about other things, the term premium in particular. Be happy to meet with you, and go through this in a lot of detail, more than you can do here.
No, I would love to do that. One of the concerns I have, as well as a lot of my colleagues up here on the Hill, is there is but so much that the Fed can do with respect to rate policy, and I fully acknowledge that. Wanted to get your views on that, but I think it's also the desire and this conversation happening right now, obviously with with Doge and Elon Musk, and the desires for efficiencies, but then also stability in federal spending and even bending the cost curve. Fiscal policy from Capitol Hill, do you think that would yield positive results in medium and long-term rates, borrowing rates, not just for the federal government, but for the American consumer?
When you say fiscal policy, you mean fiscal policy that would reduce deficits over time?
Yes, fiscal policy that will reduce deficits, fiscal restraint. I would say
Is
fiscal
that wall at
common sense,
925? I'm sure.
over the intermediate and
Hey,
long-term for the
where you
United
going?
States.
Yes. Well, so I
Hey!
think part of what market participants think about when they buy our treasuries is how much more of this is coming? Are we going to get on a sustainable path? And they want to get paid. If the answer to that is, wow, we don't have a lot of confidence in that, then they're going to need, so the term premium, the so-called term premium goes up for that reason. And there's no question if we were on a more sustainable path, I do think rates would be lower.
No, and I appreciate that testimony, because one of the things that, while we do talk about obviously tax policy in another committee, regulatory policy throughout the entire federal government, I think it's important for the American people to know that Washington does have to be fiscally responsible. And if we are not, and I say all of Washington,
Stop it.
if we are not, then the risk premium, so to speak, for borrowings in the marketplace are going to increase. Not because of the American
You can
consumer,
suck it.
not because of the strength of the American engine, but simply because the amount of treasuries that we're putting out to market are just demanding a higher premium.
KDLY has another 1 minute.
Because simply people want to be paid back. And it's just something
Thing is
where,
so
Chairman,
whippy,
you don't
man.
have to comment on that. It's something I think is important for the American people to understand. That is the major issue, if you will, over the next 20 years, 10 to 20 years for the federal government, that we have to get our fiscal house in order if we're going to give the American consumer, who might be poor, trying to make a way in this country,
CSAI
middle
dip and
income,
rip
trying
on
to
watch.
take care of their children and figure out what the next stage in life is going to look like. People who are in the upper middle class who are now forming businesses, building some real wealth for themselves and for their family, all of that is at risk if the United States government does not take its fiscal
Oh,
as
I
serious
got
as
a really
any other
bad feel
family or
there.
any other business would do. Real quick, Chairman.
Oh my gosh. How's my exit the exact same as my buy?
Is the Federal Reserve or any of its member banks currently conducting any studies on CBDCs, either for retail or wholesale purposes?
I got a piece, but not as big a piece as I should have gotten.
Any work that is designed to lead to a retail CBDC, that's not happening. When we don't support one, we don't have legal authority to do one. So no, the notion
odds.
of a wholesale CBDC is really not one that we think about or accept. We have, take Fedwire. Fedwire is a real-time, digital process.
1750.
Trillions of dollars every day between
Holy
banks.
yes,
CBDC. Some people.
If you're lazy and still use your chair, why do you ask two questions? Fake it, punch yourself in the dick.
Gentleman yields back. The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thank you so much for being here today. It's always a pleasure visiting with you. I'm going to talk about a topic that both Congressman Gonzalez
at 1 o'clock.
President brought up, which is something that's, I think, does impact our federal economy, but I know certainly does impact my district in Texas. I'm really concerned about President Trump's mass deportations efforts and their impact on your dual mandate. I believe the last time you were in front of this committee, I asked you about the impact immigration had on monetary policy, given last year's Congressional Budget Office estimates. As a reminder, the report estimated that the labor force in 2033 will be larger by 5.2 million people, largely due to the immigration surge. Since then, there have been more reports and research about the impact the immigration has on our economy, both in maximizing the employment and stability in our prices. For example, immigrants are fulfilling lower paying and oftentimes dangerous jobs more frequently than U.S.-born workers. They earn more money, pay taxes, invest back in our economy through everyday goods and services, and help create even more jobs. A study done by the National Academies of Science, Engineering, and Medicine found that foreign-born workers, or as some people say, immigrants, pay $237,000 more in taxes over their lifetime than they receive in benefits. Let me say it again, $237,000 more.
Break even on that.
So these mass deportations
So
will have
close.
a massive impact on both our economy and workforce, leading to a drop in production and spending. We're already seeing some of that in my district. Chairman Powell, I recognize that the Federal Reserve does not weigh in on policy, and so before you say that in your response, I already know that. However, immigrants' impact on our economy does impact both the unemployment and prices, as Representative Gonzalez detailed in terms of some of the work that they do. Does the Federal Reserve account for immigrants in its interest rate decisions?
Indirectly, yes. So we're looking at the labor market, and part of what drives growth in the labor market is population growth, and part of what drives population growth is immigration. So, sure, it can matter, and sometimes it matters a lot.
Right. And do you look at the consumer price index in terms of the immigrants as consumers, and if they're afraid to go out because they may get deported, they're buying less? That's what I'm hearing from businesses in my district.
I think things like that would show up in the aggregate data, but we don't single out any particular group for that.
Okay. So can you quickly list some of your Federal Reserve responsibilities, and do you have capacity to assume the role of being our consumer watchdog as the president now is focused on getting rid of the consumer
$75K of taking a deal.
So
That's a
with
solid deal,
Dodd-Frank,
dude. Here's a year's worth of pay.
The OCC and the Fed all conducted consumer exams and enforcement for the banks that they regulate and supervise. So for us, it's state member banks, and for the FDIC, state non-member banks, for the OCC, national banks. Dodd-Frank took all banks over $10 billion in assets away just for purposes of consumer examinations and enforcement, gave them to the CFPB. Statutorily, you could give that back to us or not, but it's certainly possible to restate the old order. But that would have to be something.
We'll be there to get the job done. You've got your nose to the grind.
We sent a bunch of people over to CFPB. We would need those people back. We don't have the people now who could take that over.
Tim's going to go.
Many people from the Fed and the
doing
OCC and the FDIC.
So there would have to be a real.
Zammy, let's go. 5 months.
All right.
Stock
So,
J Chickiness.
So sounds like you're obviously willing to do it, and we may have to convince the president to make that reallocation of resources. So thank you for that. And Mr. Chairman, now I'd like to ask for unanimous consent to submit for the record 3 articles. One, the Brookings, the labor market impact on deportations, and another, the Federal Reserve Bank of Dallas, migration to Texas, fills critical gaps in workforce, and the second one on unprecedented immigration surge boosts job growth.
Without objection.
And I yield back with 2 seconds.
No one yields back.
No margin on UPST.
Last member to question the chairman today will be the gentleman from New York, the vice chairman of the Subcommittee on Capital Markets, Mr. Garbarino, and you're now recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, it's good to see you again. After the last open market committee meeting, you said that the labor market conditions remain solid, unemployment has stabilized, and conditions in the labor market are balanced. This comes on the heels of a jobs report this past Friday that indicated the economy added 140,000 jobs during the month of January. Yet, when you peel back this data and look at recent employment data for the smallest of small businesses, the mom and pop shops, so firms without, not with 100 employees like those included in the jobs report, you see that small businesses are actually consistently losing jobs. In fact, the latest Intuit QuickBooks Small Business Index showed that employment for U.S. small businesses with 1 to 9 employees decreased by 42,000 jobs compared to January. Last month, in my home state of New York, small businesses employment decreased by 0.33% and revenue decreased by 0.62%, which is a decrease of $350 per small business on average. Do you believe that we are seeing the same economic and business trends between companies with fewer than 10 employees and larger companies?
I guess not. No, I mean, I think it's always the case that there are differences between sectors and size companies and all that, and we're really left with looking at the aggregate numbers.
Do you take into account the current macroeconomic trends of the smallest of the small businesses when setting policies?
We do.
You do?
Yeah. I mean, well, for one thing, we read the same data you do. The Reserve Bank presidents come in, talk about their districts at length, and they talk about, if you read the Beige Book, they're going to talk about small businesses, nonprofits, everything. So we look at everything, but at the end of the day, there's only one national unemployment rate, but there are many, many subtle changes in the data that we monitor too.
We all know small businesses drive the economy, and I know there's a company in my district, Brinkman Hardware, 40 years ago, they started with less than 10 employees. Now they have over 200. So they are able to grow, and they do great work. But I think just making sure monetary policy really does focus on helping small businesses grow is key to making sure the economy continues to grow. I'd like to move on to a topic that we've discussed.
Bitcoin's slowing down right at that resistance spot.
It is well known that I had some serious concerns with the initial proposal. One of those concerns that we haven't discussed is how the proposal would have impacted the securitization framework. At the time of the proposal, there was no narrative explanation, data, quantitative analysis, or financial modeling rationale for why the P factor was doubled. While I understand that Mr. Barr promised we'd see an economic analysis to support the proposed change, I believe that was never released. So, Chairman Powell, I'm wondering, in your opinion, have you seen any market pressures or changes that would have necessitated such an increase in the P factor?
I can't point to anything. I will say that we're going to look at all of that again when we get together again with the other agencies and try to move this forward.
Okay, well, the proposed doubling of the P factor would significantly increase the amount of capital required for securitization exposures, making securitization more expensive for banks to participate in and raising the cost of limiting the availability of credit for households and businesses. I appreciate that you will look at that, but given how this proposed change may negatively
impact a bank's ability to act as market makers in the securitization markets. When looking at this again, like you just said you would, can you commit to review this substantial increase given its outsized impact?
Sure.
I appreciate that, Chairman. And I just want to expand on one other topic that my colleague
Mount my
Representative Lucas
crypto.
brought up earlier. Over the past decade, we've seen the Fed intervene
Small
with
win.
more regular frequency
Bitcoin's
to
pulling back
maintain
right at that
orderly
resistance
functioning of
spot,
the U.S.
so-
Treasury market, much more so than decades before. Seems like the private sector was able to manage this without too much Fed intervention pre-financial crisis. Do you think regulation like supplemental leverage ratio, which some of your colleagues have commented on, is causing this? And if so, what do you think the solution is which will reduce the need for frequent Fed intervention?
Nick calling out that A and
Part of the
AB
answer is going to be to
1513.
reduce the calibration
Nice
of the
find.
supplemental leverage ratio. There are a number of things that probably need to happen with Treasury market structure, but that's one of them.
That's one of the solutions, but do you think there's other things, and you'll all work on that?
I do, yeah.
Okay, I appreciate that, Chairman. Thank you very much for being here today, and I yield back.
Gentleman yields back. I want to thank Chairman Powell for being with us today. Thank you for your testimony.
It's a nice
Without all
5 minute.
objections, all members will have 5 legislative days to submit additional written questions for the witness to the chair. The questions will be forwarded to the witness for his prompt response. Chairman Powell, please respond no later than March 31st, 2025. This hearing is adjourned.
All right.
So interesting.
This is
how
the RFK
people are
Jr.
watching so closely
potential
to see
vote.
what this
I
administration
don't think they voted
does.
yet.
And I've been
And
so
they're still doing their
pleased to see
talky
that
stuff.
the polling shows by an overwhelming amount, 70% of the American people agree with
Left or
how
right,
President
Cheese?
Donald Trump is carrying out his job, getting things done for the American people, things that they voted.
If I'm not watching when they actually vote,
And he
someone
is keeping those
donate,
promises.
making noise, whatever, I'll pay you back.
Illegal immigration.
That's how important this one is, because I think things will move when it's official that he's got the votes. I think on paper they're saying that he has 51 votes, but when it's official, I think these stocks are going to move.
Secure this border. The numbers that we are seeing,
Split
how
tail snap.
they have dropped with the number of encounters, with the number of gotaways. This is encouraging. The message is out there. The U.S. is going to protect and defend its sovereignty. We are going to protect and defend our people. That is important, and we are seeing it. Now, the president has taken some executive actions that have yielded results. By executive order, he restored the Remain in Mexico policy. He restarted the border wall construction, which, by the way, Mr. President, this Border Patrol has told us, not for just a few years, but for decades, we need a border wall. That's where the phrase, build the wall, came from. It came from people that are down there every day protecting this country from harm. The president has also ended catch and release. Now, that's that practice where somebody comes across and then they get their paper that they're claiming asylum, and they're told that they can go on into the country
Zelensky
and
had
go
a
wherever, and there are
meaningful
nonprofits down there on the
conversation
border,
with Trump.
and they give them a plane ticket and food and a phone, and off they go to their desired destination at taxpayer expense. So that has ended. The president has also sent troops to the southern border, and
DFS, TOF.
thank goodness we are seeing these
What are we talking about?
deportations of criminal illegal aliens taking place. Yesterday, in Nashville, we had 8 that were apprehended in a human trafficking ring. 8. 2 of them
Laggy ass stream.
were linked to Tren de Agua. They were Tren de
See if I
Agua
can find it on
gang
YouTube.
members. Now, these are all things that the president is doing.
I don't want to miss this BBAI though.
to make this country safe. And we have security moms all across this country, and certainly across Tennessee.
Oh, it's still trying to do 2x. It's not catching. It's not going back to normal.
That are reaching out to
Never
us
mind.
and saying, keep it going. Deport
BBAI. It's very interesting to me. If you get that daily cock, and this is a big bullish engulfing candle on the daily chart, I mean, do you go $10, $11 tomorrow?
across the country. ICE,
15% short interest?
Immigration and Customs
I mean, they're
Enforcement
definitely
has
feeling it.
arrested 11,000
I don't know.
criminal illegal aliens, including many violent offenders.
You thought the
and
vote
gang
was tomorrow?
members. Since inauguration
I don't know when the
day,
vote is. I can't find that.
9 million illegal aliens to enter the country, including tens of thousands.
It's the debates
of
phase
convicted
right now,
criminals
so
and more than 1.7
whenever
million known gotaways.
the filibuster,
And for 4 years,
if you want to even
Tennesseans
call it
and
that,
Americans across
is
the country have
done, then they'll
suffered
vote,
the
but we don't know when the
tragic
time is, I
consequences,
assume.
including rampant migrant crime. Recently, our Tennessee District Attorneys General Conference released a report documenting the widespread migrant crime in our state during the final months of the Biden administration. Now, the report confirms what we already know, that during the Biden years, every town was a border town, every state was a border state. So our Tennessee District Attorneys General took the last 3 months of 2024
QMCO is juicing.
and they said, let's look at what is happening in these last 3 months and see how this has escalated. Now, of course, we know that under Joe Biden, violent crime rose 43% his first year that he was in office. And what we saw from the District Attorney General's
As soon as Thursday. All right,
report,
thank you. I'll turn
that
this off
there
then.
were in 3
If somewhere that they do start voting, holler at your boy. Jeez, I can't take it. Sorry, you're green today. That's what I'm talking about. I think I'm like slightly red right now. I haven't looked. I don't really want to look. Like, how in the world? QMCO, that 2250 level is pretty important. Oh my gosh. Flying back to Langley next week, over under. I'm being allowed back in the country when I return. What's this? PBAI. It's a cuck and go on the 5 potential. It's got to break 922. Really slow day right now. Damn. QMC are going for that 23 again. Tesla juicing. Mm-hmm. Apps. Watching that CSAI as well. White House presser. Is there something important? Or is it just the normal presser? Oh, shit. Okay. One minute cock on BBA, I know. Daily cock is 41. Nice bounce off the 9 there. Hopefully that holds up. Wow, rumble in the press secretary room or the press room. It's wild. It's a can of worms what they're doing. State-run media. I know, like incentivized media. I mean, it's is Rumble moving on that? Oh shit! It is. The hell out of here! Freaking juiced. Just sitting here watching it. UNBN? Wait, what? Huh? What are you talking about there, Vega? So confused. Oh, are you saying unban can't? Oh, I thought you said. I don't know why I read that as come. Probably because you put it in front of pussy. Jeez. Cam knows what he needs to do. He DMs me like once a month. And my response is always, you know what you need to do. Ban cum pussy. Just so stupid. All right, this is a cuck and go setup potentially. Another 90 EMA test. Dehydrate. All right, that's kind of giving it back. Another pullback. Lower in size on that. McDonald's might be play. They had 600 stores. About Ukraine. $600 stores ain't gonna move the needle on McDonald's. $23.04 QMCO. High day, a little flat top here. Dude, the standing room in the White House press room is next level. I thought that would have been like Dunzo. That's got to be all like what they're calling new media, right? That's not like the old school peeps. We can't see. Well, she's not really talking about anything, so I don't want to piss people off or listen to the press secretary. This would be a cuck and go over 2305. Hmm. PCLA is an absolute beast. It just grinds up forever. When the prediction? What is the prediction? The SPY end the day, 4 p.m. Eastern, over 605. Oh. Are you shitting me? I hit the sell. Do you see that? Do you see that? This is what I'm talking about. As soon as I sell, the millisecond I exit. How many shares of volume is that? 30,000? What the hell is that? Hello. Shh, don't tell Aladdin. Suck it, Aladdin! Suck it! We green now? All right, we're back to green, boys. No, Looney, that was literally a millisecond. There wasn't a full second in between me selling and it going. It was, he's out up. Disgusting. Absolutely disgusting. Payment for order flow. They're saying they front running me. They bought those shares and moved it where they wanted to. What's that documentary called? I know there's a bunch of them, C-Bus. Which one are you referring to? QMCO, absolute juicer there. BAI back to the highs. Did I buy the dip? That's all I do is buy the dip. Buy the dip, buy the dip, buy the dip. Don't trip, buy the dip. All right. What did I say? 960 was BBAI? 1 day max? Yeah, we're getting close. Jeez. QMCO high day again. Damn it. Too slow. That's a big wall. Can you do it first time? That's some chunks there. Oh. UPST trying to break out of its shape here, this downward channel. See if that can hold up. What a monster move, QMCO. How you doing on that, Luke? On that hood play? Slow down quite a bit, huh, boys? Watch for the test. Roger. All right. Just close that stuff up here. Okay, day. Was hoping for better. All right, well, pop or drop soon on this sucker. AIFF. Is it moving? I think I took it off. There it is. Hello. Nothing beats what. Calling it, boys and girl. Decent day. Things are dying off right now. CSAI 5 minute. I'd be watching. BBAI. I might swing some calls overnight. That looks like a nice juicy bullish engulfing candle in the daily. We'll see how it closes. But I've been up since 7 or 8. Things are real slow. So gonna pull up line while fishing has died. We're gonna go raid Kit. See you guys tomorrow. Thank you guys for hanging out. All the new follows, all the new subs. You guys are awesome. As always, DMs are always open if you need help with anything trading wise. Here to help. Free. I'm not trying to sell you anything. I'm not going to sell you my time. Anybody that DMs you on Discord that looks like me that says, hey, pay me money. Unless I say, send me feet pics, it's not me. It's a scammer. Peace out.